Oh, look at that. We're on camera. And we're live.
Camera,
microphone working. Check. Yes.
someone that's just popped into my head looking at the screen. One of my friends last night was asking me about the show and stuff, and I was like, didn't really feel like talking about it, so I just sent him the link, and I was like, yeah, just like watch a few minutes, you'll get the gist of it. And he was like,
pretty much it.
Like, I like how you have your like shaker bottle up there, like a flex that you like work out. And I was like, no, bro, it's just like my water bottle. So I just want that to be clear. If anyone is thinking that it's just water in here, I just use this as my water bottle for the day.
I don't think we were thinking otherwise.
I know, I was just clearing up any confusion.
Yeah.
Potential confusion.
Yeah. All right.
My friend perceived that as a flex.
No.
It could be like if I had a big like muscle milk. Although I was thinking about it, I might start
muscle milk. I haven't had one of those in like 10 years.
I might start.
Is that still around?
Yeah.
Oh man.
Yeah. I used to in college. There was a
to
gas station like in the same parking lot the gym I went to, and I would just stop at that gas station and buy like a thing from there.
Yeah.
Are you checking if our mic is on?
Yeah, that was. No, we used to drink muscle milk in college all the time, but not since then. So,
but I was thinking about it too. It'd be cool maybe to start having like a different water bottle, like a fun, different water bottle every day.
Okay. Like a branded water, like
I don't know,
like an Aquafina, like that.
No. Like maybe it's not even a water bottle. Like maybe I'm like drinking out of like a football helmet.
Oh, like a method of drinking.
Yeah.
Okay, I got you. Maybe. Okay. Well, maybe you do like today would have been a good idea to do like a Yoda,
Star Wars,
like a Yoda mug.
A Yoda mug. Yeah, just some like variety up here.
Yeah.
I think that would be good.
All right. May the 4th be with you all. Happy Star Wars Day. Let's get the show on the road. We got a lot going on. Of course, the big story of today is going to be the Fed meeting. The statement comes out at 2 p.m. The press conference is always at 2:30 Eastern time. So we'll just kind of kill time until then. We got a lot to discuss. We want to talk about Starbucks. I want to talk about Starbucks. I want to talk about Lyft. Big interview today is going to be with Trivago. Yesterday we were talking about Trivago and all those travel stocks and hotels. We're going to talk to the CFO of Trivago in around 45 minutes from now, 12:15 Eastern time. Matthias Tillmann, Money Mitch is going to hop on and help us out with that one. So if you have any questions about travel, save them for 45 minutes from now when we talk with Matthias Tillmann from Trivago. And all that being said, I think we're in a good spot to start the show. What's up, everyone? What's up, Martin, Nick, MD, Born to be Free, Caleb says drink out of a coconut, Aaron.
All right.
That's a good idea.
I'll do that. I actually, I was scared of getting hit by a coconut in Miami.
Like a falling from the skies?
From a tree. Coconuts grow on trees typically.
Yeah, but they don't. I don't think they fall on the regular.
If like a big wind comes and there's like an old coconut up on the tree and it falls and hits you, more people a year die from getting hit in the head by falling coconuts than they do from shark attacks.
I didn't know that.
Okay.
And more people die from shark attacks than die from shorting stocks.
Yes.
Yes, that's
but
true.
also more people die from falling vending machines than shark attacks.
Okay. Well, there you go. All right. Smash that like button. Hit the thumbs up. Let's get this show on the road here. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news.
All right. How is everyone doing on this Wednesday? But for our show, it's basically a Thursday because we're not doing a show.
No, it's basically a Friday. We're not doing a show tomorrow.
No, we are doing a show tomorrow. You're going to be here. I'm not going to be here, but you will be. So everyone, be nice to Aaron while I'm out. We're not doing a show on Friday. And then next week also, we're not doing a show Thursday, Friday because of the conference. Speaking of the conference, if you have not bought your ticket yet and you're thinking, you know what? Screw it. What is better than a spontaneous, poorly planned trip to Vegas? Well, do I have the conference for you 1 week from tomorrow. Aaron and I will be in Vegas getting ready for the FinTwit 2022 conference. If you want to buy a ticket and you haven't already, I recommend you go to fintwit2022.com, get your ticket, and see us there because it's going to be freaking awesome.
Yeah.
And you only have to hear us push this event for 1 more week, and then it's over. I am telling you, though, if you don't go and you like follow us on Twitter and stuff, you're gonna have like serious FOMO.
Martin, that's what I've been saying. Like he's going on a wedding this week, Vegas the next week.
Wait, I can't see. My comments are all messed up on my screen. Oh, I see it now. Hey man, you gotta do what you gotta do. I have a wedding on Friday in Maryland. Actually, it's in DC. It's right. Yeah, and then the party's in Maryland. Check this out. This wedding I'm going to it's a church wedding, and then the reception is at an abandoned amusement park.
That's pretty cool,
isn't it?
Yeah.
Yeah. There's like a old merry-go-round and bumper cars.
I'm all for unusual shit. Like,
yeah.
How many weddings are you gonna go to that are just in a church and then a banquet hall?
Well, like, I mean, we're Jews, so I'm Jewish.
No.
I've been to several. Is your point?
Right.
Yeah. So
or a synagogue. And then,
I mean, my wedding,
Jewish country.
My wedding is at a hotel. Boring.
Right.
Right. But a wedding at an abandoned amusement park, that's interesting. Anyway, okay. What's going on today, everyone? Why is the market acting as if the Fed's going to hike rates to like 8% today?
Well, I think this is interesting right now, Spencer, because what we've seen in the past is bounces a lot of times, oftentimes when Powell is speaking or, announcements from the Fed. I think that the fact that we're already down like 1.5% today, and we essentially know that a 0.5% rate hike is coming in.
Yeah,
it's setting up for like an ample bounce. I feel like whenever Powell does speak, and I feel like it's almost like too easy to think that because it's just what happened like the 8 out of the past 10 times he's spoken or whatever. But it just feels...
Is that true, by the way? I don't know.
I don't know. 8 out of 10, no, not factual. I just threw it out there. But it's something like that.
Yeah.
Like
it's
or at least it feels like that.
Yeah.
But last time, if you recall, we bounced and then gave it up very quickly.
I'll be honest. I don't recall.
You don't recall?
I don't recall. I'm sorry. Do you?
Yeah.
All right, good.
Last month or whatever the last time Powell spoke, the markets like bounced right while he was, and we were like, oh, here's Powell again, whatever. And then within like an hour later than that, it was lower than when it started. So there was a big reverse. So I wouldn't be surprised if that happens today. If they say 0.75 hike, we probably drop another %, but we're already down 1.5% today on the Qs. I mean, I don't know how much more a 25 beeps difference makes for growth.
Stop saying beeps. I noticed David Green says beeps. He's the only person I've ever heard that says beeps. It's bips.
I like beeps.
No, it's just say basis points. Just don't even say basis points. Say percent.
So you're telling me and the guy that worked on Wall Street for 25 years are wrong?
Can we just say percent, 0.5%, 0.25%, 0.75%?
Why? Okay.
Can we just get away from
this? Is like GIF versus GIF.
For now on, I'm only saying percent.
Wait, do you say GIF or GIF?
I feel like whatever I say is going to be wrong, so I don't want to say. I don't know what I say. I'm not convicted on that. What should I be saying? Is it GIF? I think it should be GIF, right?
I say GIF. Apparently, the guy who created it.
Yeah, it said it's GIF.
Yeah, but like that's one time where I'm like, yeah, the guy got it wrong.
Forget it. Okay, I'm saying 0.5%. The Fed's going to raise rates 0.5% today. That means more. No one knows what a basis point is. What is a basis point?
It's nobody outside 1/100th of a percent.
Nobody outside of us knows that. Okay. For the layman.
I've seen people on Twitter like...
If I go to my parents and say, hey, mom and dad, the Fed raised rates like 50 basis points today. What do you think about that? They're going to be like, what does that even mean? If I say the Fed raised rates a 0.5 percentage point, they're still going to say, what are you going to mean? But at least they understand what a percentage point is, right? So anyway, the Fed's going to raise rates a 0.5 percentage point, a full percentage point today. And then whatever they say beyond that, that's the great unknown, right? Do they see supply chain pressures easing, inflationary pressures easing? Probably not, because
Is there no one in the chat backing me up on beep? Banana Point. That's a good one. How many beeps?
no. We're getting CPI on next Wednesday, a week from today, and then the jobs number is in 2 days. So like, how much could they really say? I saw we had an ADP print this morning but the ADP number is
they're off by
wildly
so much.
Divergent.
Why? What was it? Good or bad though?
That just shows you how little I stopped paying attention to it. I'll go right now in Benzinga Pro.
Is it the ADP one? And they go back and revise it after like the real number comes out?
Everything is revised, man. ADP non-farm employment changes. 247,000 non-farm jobs added last month versus a 395,000 job estimate. So the ADP non-farm number came in well below where the market thought it was gonna, but like that number is so often just like a false flag for the jobs number. It can be so wildly divergent, wildly off. So every number gets revised anyway, but I see no reason why we should be. The theories goes like you use ADP to forecast the jobs number, but it's not accurate. Thank you, Brian. He says it's a financial crime. Yes, Jim Cruz, we do. At least I can't speak for him. I do use the CME FedWatch tool.
I do, because I asked Spencer what's it looking like, and
that's how I know that there's like 100% chance of a half a percentage point rate hike today. But how far beyond that are they willing to go? Like I said a few minutes ago, the market is acting like we're going like to the moon in terms of the federal funds rate today.
And even with a half point
here, because
half point
I'll
rise
just show
today
you.
will still be at what, 0.75%?
Yeah, a half point rate hike would take us to a range of 0.75 of a percentage point to 1% on the federal funds rate, which is not even that high in the grand scheme of things. So the SPY is down 0.5%. Look at the Qs though, right? Look at growth today. Just no bid off the open.
Yeah, Kathy down about like 4%.
Look at Kathy.
So this is interesting because we're talking about tech and growth. AMD. So yesterday we were talking about, oh man, Andy O wants to see 100 beeps.
Like Roadrunner, like beep beep
beep beep. No, I think he wants to see a percent rise. That would tank the market for sure.
That would be madness, man. They wouldn't do that because they already said they're not gonna. So
AMD, we were on with Tim Quast yesterday. I was on with Tim Quast.
And what did Timmy say? I know what Tim said, but
so Tim said going into the earnings report, demand for AMD stock had been a 1, which means it had been on the floor. So if you're not familiar with Tim Quast and Market Structure Edge, essentially what Market Structure Edge and Quast are doing is tracking the demand and supply of stocks on the market, and his theory is that supply and demand ultimately is what drives stock prices higher and lower. Basically saying AMD stock was on the floor, so I was like, hey, that's all I need to know. I can get talked into a YOLO trade pretty easily. So I bought a couple puts on AMD before the earning.
Wait, you bought a couple puts?
Yeah, because he said demand had been on the floor for the stock.
Oh, okay, that's why you were mad last night. Got it. All right.
So then the stock pops off because the earnings are really good.
Yeah, it was a good. It was objectively, I thought, a pretty good.
And that is obviously going to affect the demand. The demand's going to increase then. But what we're seeing play out today, AMD giving up all those post-earnings gains, and for what it looks like, could potentially close into the red today.
Not what you want to see.
So, to Tim's point, I think this is what we're seeing play out, is even though the report was really good, that doesn't mean the demand is necessarily there for the stock. So, got to give it to Tim. Even with a great report, demand is not there for the stock right now.
I am not one to knock Tim, but let's not pretend like AMD is moving in a vacuum today, right? It's not as if every tech stock isn't also down, right? I mean, like look at Nvidia, down 4%, right? Qualcomm, down 2.5%. Intel, down 1.3%. So every chip stock is down. All of tech is down. Is there any tech stock that's up today? Hey, how's Airbnb doing? Remember what I said yesterday? If you buy Airbnb the day like into its earnings and sell it the first day after its earnings, the stock has risen into that opening day, that first post earnings open. It's risen every single time, but it never holds the gains. Now, again, Airbnb is also not moving in a vacuum; it's moving with the rest of the market. So it might very well go red today. We are red on an opening basis. We're down from that. What was the open today? Like 150 something.
Dude, yeah, Airbnb's moved. And that was the other thing. I bought my 2 YOLOs yesterday were Airbnb calls and AMD puts. My calls on Airbnb, I like sold them at the open for a slight loss, I think, even though the stock opened up 4 or 5%.
Yeah.
So that's the problem with having like the high implied volatility and the high IV baked into that premium when you're buying these option contracts. So you just have to be cognizant of that. But I don't know. I really want to play for a bounce this afternoon.
A bounce in everything?
Yeah, like some weekly calls on like QQQ. Because here's what's going to happen is they're going to confirm the half basis point rise.
Yes.
And then Powell is, what I'm hoping is that he speaks with a more dovish tone, even though like the action may be seen as hawkish. Okay, we're increasing rates. He'll probably say something along the lines of, we're going to maintain, we're going to have the ability to move rates around in the future, raise them more than expected if necessary, or less than if able to. But if he's able to kind of convey this message with a dovish tone, I think that's enough for the markets to see, okay, we already had the half basis point priced in. Now there's a little less uncertainty in the market.
I hope you're right, but all we have is hope, and
I'm not even as like
I see no reason to think why that would be the case. I'm rooting for you on that one, but I don't.
I am too.
I don't. Well, you're rooting for yourself. That's
well,
good.
no, I'm saying like it's more so like this is what I want to happen, what I think would be best, more so
Yeah.
than I think like this is definitely what's going to happen. But I still think there's like good risk reward in playing to the cues to the upside here.
A few comments in the chat about whether it's cold in here because you're wearing a jacket. No, not really. Just Aaron wants to wear a jacket. What's wrong with that?
Yeah.
Yeah.
Fashion Wednesdays. It's my birthday tomorrow. You guys can't be mean to me.
No,
I might go.
Do not be mean to Aaron on his birthday.
I might go to the mall or something tonight and get some T-shirts for the weekend for Vegas too.
What? What kind of T-shirts?
I don't know. Like I feel like I was like going through my clothes last night when I was packing, and like I have a bunch of like long sleeve and like pants.
You need
and not a lot of like
okay.
spring summer clothes.
Wait, did I miss a SoFi headline, guys? I think it would shock you how little I pay attention to SoFi. Really, seriously. Okay, this is a stock that, and frankly, it's not just SoFi. When I'm in something for like the long term, I really try not to look at it. Seriously. I understand that I'm down big. Why is my SoFi chart not?
Are you down bad?
Yeah, hold on. I'm
trying to get kids are saying nowadays.
Yeah, I'm down real bad. Oh yeah, this is.
Have you heard that before?
No.
Down bad?
What does that mean?
Like, I'm down bad.
What does that mean?
Like, I don't know. Like
you keep saying it. I don't know what it means.
Like, I'll give you an example. Like, if
I'm down bad in SoFi.
Yeah, you are down bad in SoFi. But how the kids are using it these days, Spencer, is like, say it's Sunday morning and I went out the night before and like my phone died and I woke up in a ditch and I don't know where I am. I'd wake up and I'd be like, I'm down bad.
Okay. All right.
Or like the guy in The Hangover that got locked on the roof, he was probably up there like, dang, I'm down bad.
All right. So guys, I really don't pay attention to this stock. I really don't pay attention to a lot of the stocks that I own, frankly. At least I try not to, because long-term means long-term. It means not thinking about it every day or every week. So yeah, I guess we've stopped going down here for the moment, but the trend is your friend and the trend is down until we get out of the student loan moratorium. I see no reason why SoFi should really bounce back here. This is probably going to end up having to be a multi-year thing, right? It wouldn't shock me for a second if it takes us several years for SoFi to come back to where I bought at 20.
Wait, I'm sorry. I just am now realizing this thing's at $6.
I don't think people who aren't in these things realize how bad some of these stocks are down.
I didn't realize that.
It's not just SoFi.
No, not at all.
It's not just SoFi, man. There are so many stocks that are just like, maybe we should talk about Lyft here.
Wait, who did
like look at Lyft. Lyft at $20. $20.
Let's talk about Lyft's report.
It's not an all-time low. The all-time low in Lyft was 14. That was from
the world shut down.
That was when the world. That was when the world ended. That was when the world ended for.
And literally no one was Ubering or Lyfting anywhere.
For a couple weeks ago, the world ended, and Lyft went to $14 a share.
Because they lost their business, and now it's back there, even though.
Here's the thing about Lyft, though, and I read through the transcript and I looked through the numbers, not super closely. Is it didn't even seem like it was that bad a report to me. Everything that they reported, they said it was above their own projections. However, their EBITDA is getting crushed because they're having to spend more money to incentivize drivers onto the platform. And if you show any sign, even the smallest signal that your business is not firing on all cylinders, then Wall Street will kill you right now.
Yeah, it's like that.
So,
remember that clip we played a few weeks ago from Silicon Valley where the guy was talking about how he didn't want revenue?
Oh, yeah, no, yeah, revenue is bad.
Right. And that's why like Amazon like ran as like a not like they always said no to revenue for growth instead, right? Because they knew, okay, as long as we can show we're growing, we don't even need to show revenue because, hey, investors will invest in the growth. They don't need the revenue. Once you pass that threshold to instead of just growing at all costs, now you're taking in some revenue, you're beholden to the investors and needing to increase that revenue quarter over quarter. And anytime you run into these headwinds, you're screwed. Because people don't want to see decreasing revenue. That is like the worst. It's the same thing if you're growth and not if you're pre-revenue and the growth slows down. That's the same as a company that's bringing in revenue and the revenue slowing down.
Because the only thing better than showing that you can make money is showing that you have the potential to make money.
Yeah,
potential is worth all. Comment in the chat that I got shamathed. I absolutely did get shamathed. Maybe we should put. I want to grab a list of all of his SPACs, because man, it's brutal. Let's get Lyft off there. Like Metro Mile. I mentioned this one the other day, right? Like on Monday or Friday. Look at Metro Mile. This is a Chamath SPAC. He brought this one public. Under $1.
Which one?
Metro Mile. Under $1.
I don't even remember this one, but there's like if you I saw someone from Bloomberg.
It's madness.
I saw someone from Bloomberg post this, like all of his SPACs and pipes like put together the return, and it's just ridiculous.
Dude, the capital destruction on these deals. I mean, not for him. He made out like a bandit. Good for him, I suppose. Bad for the rest of us. That's just a disaster. It just goes to show. I felt like for whatever reason in the 2020, 2021 window, a lot of people were getting in line behind influencers, whether it's Roaring Kitty, whether it's Chamath, people doing it now with Elon. Don't just fall in line behind any one person, right? Do your own thing, because no one's looking out for you like you are, right? I think that's
unless you've been following. Wait, I saw.
No. I think you shouldn't do something just because someone else is doing it.
I saw a tweet yesterday, and I don't know if this is true or not, but it said like, Berkshire Hathaway.
Oh, Chris is correcting me. He invested in the pipe, but it wasn't. All right, sorry. Semantics.
Berkshire Hathaway's.
What about Berkshire Hathaway?
The stock could drop like 95% from its current share price and would still be outpacing the S&P 500 since its inception. Or something like that. I saw the tweet and I was like, that seems really crazy, but I didn't like fact check it. So now I'm repeating it without fact checking it, but it was
SMH.
Something, it was something like along those lines.
SMH.
I'm gonna try to find it right
All right,
now.
while you do that, let's take a quick look at Uber. Has it given? Oh no, it gave back all the gains from this morning. Look at look at the 24 hours that Uber stock has had. So it gets punished last night, right? Because of the Lyft report, right? Lyft report is bad. Everyone just assumes Uber is going to be bad. All right. Uber says, okay, we see you, Lyft. Here's our report. And it wasn't quite quite as bad. It wasn't amazing. I mean, the Lyft report wasn't that bad to me either. The Uber report was fine, I thought. Here, I'll give you the numbers. If you go to the news feed in Pro, you can see them here. Gross bookings up 35% year over year. A lot of the bottom line earnings was messed up by this equity investments. I didn't look deep enough to know what that's referring to. Revenue came in above estimates. Sales above estimates. Anyway, the headlines were okay. So Uber gains it back, right? It had those losses from Lyft, gains it back this morning, and then from 7:30 onward this morning, just leaked and leaked and leaked and leaked, and now we are down 8.5%. Sometimes timing is everything. If I were like at investor relations of these companies, I would say general rule of thumb, never report earnings on a Fed day, because you just don't know. The whole market could turn at 2:30. It just could turn.
Yeah, I mean, and that's why oftentimes macro headwinds are way more important than whatever the actual headlines are from the company, right? If I look at AMD today, right? You can report a great quarter, and if growth is out of favor today and you're a growth stock, you're gonna get hit.
I mean, AMD. It's
I
it's
also
really not a good time to be chasing stocks that are up like AMD was this morning. But man, did anyone watch our stream last night, our AMD stream? Man, was that call bullish? I thought they are just even when it's not good, it's good. Like is what I got from that call. Holy cow, they are just machines over there. Like Lisa Su, is she not like the best,
she's the
one
best.
of the best tech executives of all time? She's got to be. She's got to be. Wow, Ken Hall has been buying. Ken, I hope these are like small positions for you, because buying dips is really, really hard. Well, first off, Twitter, and we should talk about that. Ken Hall said he's buying Twitter. I want to talk about Twitter here. All right, I sold my Twitter. I'm out of it. I want no part of this. You see this headline yesterday from Reuters about Twitter?
That Elon's gonna try to take it public again.
Yeah, Elon wants. This is. I don't think it's from Elon himself, but I think it's from Reuters that Elon would want to take Twitter public again. That big red candle. That's when that headline hit at 4:00 yesterday. That shouldn't be a total surprise. I think what's happening here is it's becoming clear now that Elon is maybe doesn't have a plan here. And I want no part of that plan, because the longer this goes on, I'm thinking the greater the likelihood that he just backs out. And if he backs out, Twitter's going like $30 in a heartbeat. So I'm out. I'm done with Twitter. If you're in Twitter, your best case scenario, your literal best case scenario, is the stock goes to 54.20 and you get paid $6 from here, right? That's it. Ken Hall, why do you have you have calls and puts for January of next year? Why? It's getting taken over at 54.20. Why would you do that? Unless they're from before. But my chat's not loading really, so it's hard for me to see what people are saying in real time. Yeah, anything can happen with Elon. He's a wild card, no doubt. All right. Wait. So okay, we didn't really finish talking about Lyft though. Are you buying Lyft here, Aaron?
No,
No. Are you buying Lyft at all ever?
probably not.
Probably not. Me too. I'm with you.
I don't like the business model. I don't think it's very. I don't think Uber's ever turned a profit. Speaking of,
Well, we can look at that here in Benzinga Pro. So let's go to the
I'm still
calendar.
trying to find this tweet, guys. I'm sorry.
Let's go to the calendar. Lyft is profitable. Lyft is profitable on a bottom line earnings per share basis. Uber, same story. No, not same story. Uber is, but is the earnings growing? Is the earnings and the revenue growing? You know, because we don't. All right, this is just a quick lesson in what Wall Street cares about. For the last 10 years, Wall Street only really cared about revenue growth. Revenue, money coming in. We don't care about your expenses. We don't care about whether you're losing money. Just is more money coming in the door. Now, we care very much about the bottom line. We care very much about your expenses, about your EBITDA, about your margins, right? About your costs. So is their EPS growing for Uber? It widened. Wow. It widened big time. But again, that was due to they said there were some equity investments there that messed up that number. So those may have been one-time things. If we just look last year, just Q1 to Q4 of last year, oh man, the earnings loss got wider as the year went on. I guess they're getting narrower if you go back a few years, but I've never owned Uber and I have no interest in Uber or Lyft for that
I
matter.
found it finally.
Wait, Reed says they're going to have their first positive free cash flow year this year. Is that maybe they said that yesterday and I missed it?
All right, guys. This took me a while, so I'm going to share it.
All right, what is this thing?
So it's saying that since July 65.
Oh, I saw the caveat in the tweet, not including dividends.
Yeah, not including S&P 500 dividends, Berkshire Hathaway stock price could fall 99.85% and still be outperforming the SPX since the summer
That doesn't do anything for me because I wasn't alive in 1965.
No, yeah, I mean, you're gonna buy. This is Berk A shares at $14.86.
Come on, what is this?
It's $500,000 now.
Come on.
Yeah. All right.
Wait, my fiance just texted me. This is off topic. Is 1220 a good SAT score? I think it's fine, right?
I only took the ACT.
Survey says 1220. Yeah, or nay. I think it's pretty good.
Well, here, let me do.
It's at a 1600. I think I got a 1290. So 1220 is not bad.
It's a 25 on the ACT.
Okay, is that not good?
Not great.
Not great.
I mean, it's like average. Actually, I think it's
no. I think it's fine. I think it's fine.
Yeah,
1220 is fine.
But like, if you're like trying to get into like an Ivy League, you're not getting in with a 25.
No.
Why does your fiance take? How old's your fiance? Why is she taking the SAT now?
Dude, she's not taking the SATs. She's asking me because someone we know is taking the SATs. Someone in the family.
Okay.
Yeah.
See, Kevin thought the same thing.
She's not taking 1220 out of what? 1600.
Yeah.
All right. Back to the. Sorry, that was off topic. All right, we're gonna have Trivago CFO Matthias Tillmann on in 10 minutes. Dude, I walked into that one, didn't I? All right. Should have. No, I brought that up. We're going to have, who else is joining us today? Jesse Kaylor on at 1:30, I think. Jesse, if you're here, holler at us. And we're very light on guests today, just as an FYI. Although right now, we do have a guest in the office that is someone's meeting with Jason, talking high-level business things. Are we going to be able to grab that guest? It appears not. Oh, well, that's sad. Now they're all walking away now. But Jason Raznick is in the office. Let's see if we can grab Raz for the show for like 5 minutes. You think we can grab him?
I don't know.
Who wants to go? Me or you? I don't want to go.
Nose goes.
Damn it. I don't want to go either. I hope he'll come back. The people miss Raz. What else was on the list? Okay, let's go back to our doc. I have a doc of topics here.
Okay, I actually
but I was told you have things to discuss as well.
I do.
Okay, well, so let's go to your things.
All right, so I the other day took a short position out on Coinbase. I closed it because like as soon as I opened it, Coinbase ripped up like 5%.
Okay.
And Coinbase is basically at like all-time lows and has dropped 60% in the last year, 35% in the last 3 months alone. So it's not, I'm not saying this is like the juiciest trade idea or investing idea out there, because obviously in retrospect, I would have loved to start shorting coin at like 350 back in November when Bitcoin was at all-time highs. But hindsight is always 2020 and we can't do that. So I'm just working with the information that I have available to me now. And basically, as long as Bitcoin is below $40,000, I'm short Coinbase. Because here's the thing is Bitcoin has gotten to a point where it's big enough where we may not see these huge 5, 6, 7% swings anymore. And we may not see it, you know, drop 20% in a day or over the span of 2 days like we've seen Bitcoin move in the past. With that said, and we did this.
Look at that chart, man. Look at that chart.
Yeah, we did this a few months ago. Chris Kache wrote an article essentially like, here's how much you would make in Bitcoin if you invested $1,000, and Kathy Wood's price prediction of $1 million. And like, basically the bottom line was this article was it was a lot less than you would think, right? If you invested like $100 now and Bitcoin goes to $1 million, you're basically making like less than $2,000. That's not that juicy. Like Bitcoin's whole thing for so long was people were becoming making millions of dollars because they had bought Bitcoin at $5 and then it goes to $1,000. If Bitcoin stays below $40,000, even if it's just steady and stable, that's going to be enough to you know, not encourage more buyers to come in of Bitcoin. I did find a chart of Coinbase's trading activity, and it looks very, very, very bearish. Let me try to pull that up real quick because I just saw it on. Yep, here, let me pull it up. So basically,
all right, I just got word from Raz. Raz is unable to join us today.
That's fine.
He's very stressed because his daughter's bat mitzvah is in 2 days.
Yeah. So here's the Coinbase exchange trading volumes. This is how active.
Oh my gosh.
The money amount being traded on Bitcoin is. You can see this spike back here is November 20. Or no, sorry, it's not November 2021. This is November 2021 when Bitcoin was at all-time highs. We've fallen off a cliff since then, and even in the past month or so, looks like we're hitting like dangerous levels. Coinbase opened its NFT marketplace a few weeks ago, and it did 900 transactions in like the first 48 hours.
That sounds bad. Is it bad?
It was bad. It was very underwhelming. I don't know what their like internal projections were. I don't know what the numbers released are, but from all that we can tell, the Coinbase rollout of its NFT marketplace, which was supposed to be a big deal for the company, you know, they're going to take on OpenSea, and it was going to be this whole big deal, just has not worked out. So basically, Spencer, my bottom line is, unless we're getting a big move in like Bitcoin and Ethereum, and I'm talking like 10% swings to the upside over the span of you know, 3 days or a week or so, it's not going to be enough. Bitcoin holding 38,000 or hovering around 40,000 is not going to be enough to encourage new investors to come into this marketplace. And just by looking at this chart, Coinbase's trading volume is low, and it doesn't matter that the stock is seen as cheap based on the company's earnings last year, because guess what? They're not doing those same earnings this year.
They are not.
They're not going to make the same amount of money.
So the price of Bitcoin matters, right? Because the price of higher Bitcoin goes, the more people want to trade it.
Exactly.
Right. So
the more people are talking about it. The more
right. So where's Bitcoin right now? 38,945. And the all-time high was what? 767?
Yeah.
66, 67.
I'm basically saying that for Coinbase to be interesting again as a company, Bitcoin will need to come up to like 45, you know, whatever. Because it doesn't matter. Like crypto's here and it's here to stay. And Coinbase is going to be around. It's going to be seen as the leader or a leader as an exchange. But here's what you have to take into account is when Coinbase was trading at $200 a share or $300 a share, it was priced in of where cryptocurrency was going and how prevalent it was going to be and how many people were going to own and buy Bitcoin.
Yeah.
And now those numbers have been absolutely slaughtered in the span of like 8 months.
Speaking of, I know it's sort of off topic because it's not Coinbase, but did you hear what MicroStrategy said on their earnings call? So you know MSTR, right?
Yeah.
This is Michael Saylor.
Yeah, they own like the most Bitcoin out of any company, right?
They own like 100,000 Bitcoin, or something like that. They said if Bitcoin falls to $21,000, because they bought all this Bitcoin with debt, they took out loans.
Yeah.
If Bitcoin falls to 21,000, they're getting margin called.
Oh yeah.
Oh, that's great. That's great. I mean, look at this. Look at this stock. Look at this MSTR. It fits in with your Coinbase theme. I mean, Coinbase at least has fundamentals behind it. MicroStrategy has basically nothing, but I'm just got Bitcoin and that's it. I think this company exists to own Bitcoin, right? Anyway, let's overlay my Coinbase with this MSTR. Okay. Oh gosh. And all right, let's go back to the Coinbase chart now because the MSTR chart's giving me anxiety. Coinbase chart's giving me anxiety too. So you are doing something that I have never quite been able to do, which is you're shorting a stock, you're betting against a stock that's already at all-time lows.
Yeah.
Yeah.
Which is the same as like I want to buy stocks at all-time highs, or I don't mind.
You're right. You're right.
I don't mind it.
You're right.
So that's what I'm saying. Is like there'd be more alpha in this trade idea if it was 2 months ago. Like have more opportunity, more potential to move. But
then again, the stock made an all-time low in January, and we've halved since then. So the trend is your friend.
Right.
Right.
I really like the risk I'm running here with the short trade on Coinbase is Bitcoin running. And
do you have? I'm sorry. What is this? A put op? What is it we're talking about?
Yeah. So I don't have an open position. So I bought put contracts last week that I ended up selling because I sold them yesterday. So basically, I think I bought some puts on Monday when I first was like, yeah, this makes sense as a good short. And the stock literally went up like 5% the next day. So I closed those for a loss. And then, I mean, even today, Spencer, the low of the day is like 116. We're back up to 119 right now. Like if I bought those puts right now and we go back to those lows of the day, but I'm not going to do it before the Fed because they could say something that could make Bitcoin go up or down.
Yeah, man. The whole crypto stock trade, every crypto stock is underperforming crypto because you have two headwinds working against it. You got
I think it's because of that phenomenon that I said, because even if Bitcoin's holding steady, even if Bitcoin stays at 38,000,
right.
That's
not good enough.
Right. The volume of people trading it, people coming in to buy it is going to decrease over time because it's not exciting. It's not boring. It's not appreciating. It's why are you going to put your money in an asset it's like all those jokes that people are like on Twitter. They're like, I bought Bitcoin to fight inflation. Now instead of 8% inflation, I have 50% inflation or whatever, because their money's been cut in half from 60,000 to 38,000.
Yeah. I don't know what to think. I'm still buying Bitcoin because I have, in the grand scheme of things, it's a very, very small amount compared to my stocks. So I'm just evening out a little bit on that front from like an allocation standpoint. But I will probably stop buying Bitcoin in the next few months, maybe just when I don't know when, but at a certain weighting, I don't know, 10%, I'll be done.
That's pretty substantial. I would say 10% of your portfolio all in Bitcoin.
10% of like my invested assets. So my 401k, if you combine my 401k, my Roth, my Fidelity account where I do some stupid stuff, and then the crypto, right? So 10% of all that is when I'll stop. All right, let's bring on our first guest of the day. And actually, before we bring him on, let's bring on Money Mitch onto the show, because Mitch is going to help us out, help me out with this interview, because we're talking to Matthias Tillmann, the CFO of Trivago. So Money Mitch, Let's get you on here. What's up, man? How we doing?
I gotta get my headphones on for this.
What's going on, guys? Let's go
Yo!
ahead. Let's dive right in. How we doing?
We're doing okay. We're doing okay. We want to. We were having the conversation yesterday about these about companies like Trivago and travel stocks and Airbnb and all that. So it's good that we're having Matthias on today. Should we just get him on the show and rip it?
Hell yeah,
Yeah.
let's do it. Hotel Trivago, baby.
Hotel
Let's do it.
Trivago? Is that a thing?
Yeah.
All right. Matthias Tillmann, CFO of Trivago. Welcome to Benzinga Live.
Hi guys, hey. Thanks, how are you?
Welcome to
Doing
the show.
Fantastic. Welcome to the show.
Having-
How's your day going? How's your week going?
Good. It's a quite busy week. Travel is reporting. We reported today, or we had our earnings call today. We reported on Monday, Expedia as
Right.
well. So lots of data coming out. Super interesting for us to see as well where the industry is heading and what we see. So yeah, so far so good.
So let's talk high level about that report, and then we'll go from there. But it seemed like from your going through your release and looking at your peers and Expedia that we are definitely coming back, or we've come back a long ways from where we were at the depths of the pandemic. We're still not all the way back, but at least we're getting there. Give us a sense of how far we have yet to go to get back to where we were pre-COVID.
Yeah, that's a good question. And to answer that, we are going in different paces in different parts of the world. So I have to say that. So we report different segments like Americas, Europe, and then what we call rest of world. And if I start with rest of world, there we see the least of the recovery. Some Asian countries still have strict lockdowns in place. I'm pretty sure you know that in China there's a strict zero COVID strategy. We see that in other parts of the world as well. Then rest of world for us includes Eastern Europe, and there with the conflict in Ukraine, we saw another thing that impacted travel demand recently. But looking at Americas, the US is recovering quite good. We have seen a steady recovery, and that continues. And more recently, we saw that city travel is coming back, an important segment for the industry, for us as well. International travel is picking up cross-border from the US to Latin America, to Canada, but also to Europe recently. And in Europe, so the start of the year was still a bit bumpy with a high number of new infections due to Omicron, difficult for travel. Many countries in Europe had restrictions in place, but country by country saw lifting restrictions, and it's becoming easier to travel within Europe. And then the conflict started in Ukraine, which had a negative impact on our core markets in Europe. But through March, we have seen a recovery from that. And since the beginning of April, we are back to pre-conflict levels. And I mean, if you look at our numbers, in April, in terms of volumes, we were roughly at 70% of 2019 levels, so pre-COVID. So we recovered quite a bit, but it shows there's also some headroom still for us.
Matthias, one number that jumped out to me in going through the financials here was your ROAS, your return on advertising spend, which actually decreased year over year. Why is that? What is behind that lowering return on your advertising?
Yeah, that's a good question, and that's mainly because of the base effect. So last year in Q1, if you remember, Europe was in full lockdown, so there was no travel, so we didn't advertise at all. And then if you don't advertise, then you have fewer volumes, but you still have some volume, and then your return on advertising spend is somewhat inflated because you have a very low base. So that changed this quarter. We actively invested again. We ramped up our marketing spend by over 180% year over year, so significantly. And compared to that, the return on advertising spend only came down a little bit. Yeah? So I think we kept most of the marketing efficiency, but at a much higher revenue base. Our revenue increased over 166%. So in terms of absolute contribution, profit margin that we got through our marketing activities, we improved significantly compared to a year ago.
All right, I'm going to go ahead and dive on in here. Now, one of the things that we've been seeing is we saw Expedia's CEO talk about that he feeling really good about a summary recovery. I wonder how you guys are seeing the summer. Do you guys see kind of the same kind of recovery coming into summer in the Americas market?
Yeah, pretty similar. And I mean, our biggest segment is Europe, but then Americas is the second biggest, and the US is our biggest market globally. And it's quite similar. So we have seen last year already that going into May, June, that travel was recovering. You could see a lot of pent-up demand. And people coming out of the pandemic, they wanted to get out, they wanted to travel. It was still difficult. This year, it is different. So we see the same kind of desire to travel, and people want to do something, but it's easier to do so. So in Europe, there are fewer restrictions. In Americas, there are fewer restrictions. So we feel pretty good about the recovery as well. When we look at April, the trend is pretty much in terms of shape of recovery similar to last year, but at a higher base already. And we expect that to continue. At the same time, we have seen certain segments coming back. I talked about city travel. It's one of the things we are seeing picking up. It's international travel. So we think there's headroom, and we are pretty excited and optimistic about the upcoming months.
Yeah, one area where you guys have an advantage is in the global luxury travel market. How do you see this building right now?
Yeah, I mean, when you look at the travel market, it's quite interesting right now because there's one theme. It's a more general theme. It's inflation. It's going up everywhere, and it's also going up in travel. So you see what we call ADR, so average daily rates, going up significantly, in particular in the US. And you see in the luxury segment, it's going up more than other segments. So there are different effects. And one question I got a lot today was how is that impacting demand? Is that a risk for the recovery? Do you see people scaling back? And that's something we cannot see right now. So that's positive, I think. I also think that looking at the US, looking at Europe, household savings are at very high levels. And at the same time, we are coming out of a 2-year period of a pandemic where people couldn't travel the way they wanted to, desire is high. So they're willing to spend more money on that. We might see certain shifts between segments, luxury versus lower budget or things like that. So that could happen. I don't know, to be honest, to what extent. We cannot see that right now. But what I do believe and what we believe in, I mean, we are a price comparison site. So we help you to make sure that you don't overpay. And in a situation where everybody becomes more price conscious, that's actually more valuable than ever. And you can use that tool to maybe have the same vacation, just saving because you're comparing and then going on that trip.
Yeah, I think it's important sometimes to just kind of really state exactly what you guys do. It's a bidding kind of war there with you using kind of Expedia, the different kind of platforms to get you guys there. So how do you guys go about getting those lower prices?
We aggregate prices from pretty much everybody globally. So we have live connectivity for millions of properties on our platform, and we do that through over 200 different partners. And that's the beauty. If you take an example for a hotel in New York City, we probably have 30 or 40 different sources for rates. And there's no such thing as rate parity. There are different prices out there, but you have to make them visible. You have to make them transparent. And even if you don't find your accommodation on Trivago, you can still check if you know exactly where you want to stay. But check is there a supplier that has a better price, and then just pick the one that suits you best. And that's exactly what we are doing.
I want to jump in because I wanted to talk about that. So just recently, the other week, in Australian court, fined Trivago, I think it was $33 million for what they said that you were misleading consumers about the cheapest rates. Can you comment on that?
Yeah, sure. So that's a judgment that we received in 2020, and the Australian Consumer Commission basically said that the way we were displaying prices and were doing certain advertising practices were not compliant with their consumer law. When we received that judgment, we changed the way we display prices and advertise for it to comply with that. Now we got the judgment. I mean, we are disappointed of the outcome, to be honest, given that we changed it. And looking at other regulators who looked at the same thing, their views differed from what we saw in Australia. But at the same time, we are happy to put this behind us. I think the website in Australia, as everywhere else in the world, is transparent. We help millions of users to find better deals, and we will continue to do that. And also for our Australian platform.
Matthias, I was hoping you could talk specifically about what you saw in March, right? The Russian invasion of Ukraine happened at the end of February. What did you see in March as the world sort of reacted to that invasion in terms of, demand for travel and activity on the platform?
Yeah, so in our segments, Americas, we didn't really see a big change. So the US, that was not really notable. In Germany, it was, and it's not only in Eastern Europe, but also in neighboring countries. Like take Germany as an example. I mean, we are a German company. We're based in Germany, close to Poland, which is a neighboring country, and there you could see the impact in quite a few of our core markets in what we call developed Europe. So it's really, you saw a drop in demand, let's call it around 10 to 15%, and then it stayed at that lower level for a couple of weeks. And then mid-March, we saw a recovery from those lower levels. And by end of March, we were basically back in those countries at pre-conflict level.
All right, so I'm going to go ahead and add up. Now, one of the things that I've been seeing, and it's actually happened to my family, we had a flight cancellation. We've been seeing more flights canceled. Have you guys been seeing an increase in, let's say, maybe like trip insurance or something like that? Is that something common that you guys are seeing increasing? And are you guys seeing more cancellations?
So we don't offer flights. We just offer accommodation, and there it's slightly different. What we have seen during the pandemic is that the demand for pre-cancelable rates went up quite significantly, and that's how we try to support users and meet that demand by bringing on more of those rates and offer that. That has been very popular, still is very popular. So if you don't have that, then people are reluctant. Some might book an insurance. They don't do that through us, so we wouldn't necessarily see that. But what we can see clearly is if we have, let's assume as an example, for the same property, we have two suppliers. One is offering a rate that is cancelable, and the other that is not cancelable, then you clearly see a huge shift towards the freely cancelable rate, even though the price might be higher.
All right. Now, one of the things that we clearly see is on the financials, we see a lot of cash there. We don't see a lot of debt. Is there any need to kind of raise cash here? And do you guys see any maybe M&A coming into play? Do you guys see that opportunity out there?
Yeah, so we don't need more cash than we have. I think we are well capitalized at this point with over 250 million euros in cash. M&A is always an option. We haven't changed our approach. What we have done in the past is opportunistically looking at tech companies that help us to innovate faster. So things that whenever we see we can leapfrog a development by acquiring or investing into tech startups or tech companies, then this could be interesting for us to develop. So to increase the pace of our innovation, and that what we will continue to do.
And then just Matthias, before we let you go here, just what is your take on just the public markets reaction? Not today or or this week or this month, but just in the last year. It's not unique to your company, obviously. The whole market has been broadly weak. But what is your reaction to just seeing the performance of the stock?
Yeah, it's always difficult to comment on that. In a way, I don't focus on it day to day or even quarter to quarter. I think the past 2 years, it's clear that there is this impact from the pandemic. There's an unclear outlook how exactly we will come out of the pandemic. So I can understand that. There's certainly a discount because of that in our share price. I myself, as a company, focus on coming out stronger. We believe in our product developments and what we can do there to gain market share post-pandemic. And I'm sure if we do that, if we deliver and continue on the path we have seen over the last couple of quarters where we already reached 2019 profitability levels again, if we continue on that, then the share price will take care of itself.
Very, very politically correct answer. Matthias Tillmann, the CFO of Trivago. Matthias, a pleasure to talk to you today. Thanks a lot.
Pleasure.
It was a pleasure. Thank you.
Thank you.
All right.
Hey.
Money Mitch, did we learn anything from that? What did we learn?
Well, one thing you can clearly see is that we do have some traveling going on in Europe, which I thought would actually slow down with the conflict that's going on. But it seems like people are still traveling. I think there is that pent up demand, but how long does that pent up demand really last? I mean, like we just talked about it, right? Inflation. He even said it. We don't see that consumer spending going down. That's what he said.
Yeah.
But I mean, we're going to definitely pay attention to that with inflation.
Yeah. And we'll have to watch how their business diverges in the US and Europe. I would imagine the US business would be mostly fine. The Europe business seems like it could be in trouble though, but we'll see.
Yeah.
Probably not a great time to be buying growth in general, but that's just the way it is sometimes. Yeah. And if you're long this stock or one like it, as I said earlier with SoFi, it's probably going to have to be a multi-year thing for you. If you're holding the bag.
Yeah, take the Kathy Wood advice and have a 5-year.
Don't do. Oh, I thought you were gonna say like I just averaged down.
Oh yeah.
Do that no. I mean, one of the things that you can also see is that at least this company doesn't have like a lot of debt. That's one thing that I wanted to note too. Yeah. It's not like a debt, like it just has a huge amount of debt and it's trying to get towards money. I think this company tries to keep themselves where they kind of need to be on the growth side. So that's why I kind of noted that one. And I was wondering if there was any need to kind of raise cash to do something else, but it seems like they're just kind of fine with the business that they have right now and keep working the margins.
All right. Money Mitch wanted to come on today specifically to talk to Matthias Tillmann. So Money Mitch,
of course,
pleasure as always. We will catch you a little bit later.
See you later, guys.
All right, guys. By the way, Mitch, if you missed Mitch's show yesterday, he spoke with Mark Yusko from Morgan Creek Capital, Morgan Creek Digital, one of the biggest Bitcoin bulls on the street. If you haven't seen that, go to youtube.com/Benzinga, go to the videos tab, check it out. He had a great conversation with Mark Yusko yesterday. And yeah, happy. This is my generic response whenever Aaron Bree opens his mouth. I just go, don't, and then he says something, and then maybe I was wrong. Maybe I wasn't.
Spencer, we would be remiss not to talk about this move that the market's made.
I know. Sorry, I was distracted. I was going to bring it up, and then I got all distracted. But yes, good call out. Let's get my Qs chart back up here because I just had the Qs up. There we go.
When does Powell speak? 2 p.m.
2:30. This is all.
But
just
the minutes come out at 2.
The statement is out at 2. Yeah, the statement is out at 2. The press conference is at 2:30. I think this is all just computers. Someone somewhere, maybe it was Citigroup, just flipped the buy switch a few minutes ago, or like an hour ago, right? And like that was that.
I'll admit something, Spencer.
Okay.
I would see people, or I would talk to people that said that they worked in buy side, sell side.
Which side? Both sides, or
no. Like some people you were working in buy side, some people working in sell side, and like I don't know. I always had this like idea in my head, like the market maker. Like they're like, no, it's literally just people that like are doing research on like what to buy and what to sell.
Well, for equities and right. But like that's not, your friends didn't work on like trading desks,
right?
Like right. Okay.
I just didn't really know what like buy side, sell side meant, I guess, for a while, and it's like it's very
So
simple.
the buy side is if you think of Wall Street as two sides of two people at a table. One person at the table typically will sell securities, will offer investments, and the other person at the table will buy those same investments, right? The buy side is hedge funds and family offices and institutional investors. That's the buy side. The sell side is all of the firms that sell securities to the market. So that's your big banks, more or less, is what the idea. Or any financial firm that sells securities or facilitates securities transactions on Wall Street. That's the sell side. So most of the research, most of the upgrades and downgrades that we talk about, that's sell side of research. It's coming from the big banks, right? Their job, their core business, right? What they do is, or at least one of their businesses, is they sell securities, and as part of that, they give their own research, right? They're independent. I put that in quotes, but it typically is independent. At least the theory. In theory, it should be independent research on the market. And then the buy side is like, your private family offices, your hedge funds, and your people that are doing their own research for themselves, right? They're doing research for themselves. That's the difference between the buy side and the sell side. Okay.
Did you see this interview with Paul Tudor Jones making rounds?
Yeah, he told Jerome. Oh, he said it's like the worst time ever to get to invest. Is what he said.
Yeah,
he said it's like the worst time ever to buy stocks and bonds.
Something like that.
Which, hey, that's okay by me. I don't need my investments.
I hate when like rich ass people say shit like that. Like, you don't want to own stocks right now. It's bad time, because it's like, look at the all-time chart. Like, it's never, in the short term you can lose money owning stocks, but like saying you want to be cash is just like a silly thing.
Do as I do, not as I say. How is he positioned? We don't know. So go away. I made a poem. No, all these billionaires, whether it's Paul Tudor Jones, Ray Dalio, I've noticed that they are very, very quick to sound the alarm.
Right.
But they're net long.
I know.
They have to be.
And even if they're not long, like public, like stocks, like they have investments in other places that they still are, like to just say like, oh, you got to go like all cash right now, you don't want to own stocks or bonds.
Stupid.
To me, is like, it's just like silly advice.
Silly town. All right, we are T-minus 1 hour and 22 minutes.
I'm excited for this one.
I'm not as excited for this one. The last one was the big one, right? Because that was the first hike, and this one. The market was not as convicted as far as actually maybe they were about going a quarter of a percentage point. This time the market is like saying with near certainty it's going to be a half percentage point, and then a half percentage point from there, and then a half percentage point from there. We'll find out. Whatever. I gotta admit, man, part of me just doesn't like Fed days, because. And you could see this overnight. If I pull up a chart of the SPY, here, let me do that right now. Let me pull up an intraday chart of the SPY. Just look at the overnight session. Okay. Look at a typical overnight session in the SPY, right? So if this is from oh Jesus, Aaron just spilled his coffee everywhere. Oh gosh.
Luckily not that much. 18,
oh man, we got spillage.
All right, luckily
we got spillage here.
To...
Just coffee everywhere. Tissues.
We're confined to a very good part of the desk right now.
Gosh.
It's not like going on any laptops or Stream Deck or anything.
Oh God!
No, stop wasting the tissues. We got paper towels.
I'm trying to help us.
I know, but we got paper towels right here.
Dear Lord, you guys see what I have to deal with?
That was my bad. Again, it's my birthday tomorrow, so.
Are you drunk?
No one can.
He's drunk already.
Yeah.
Oh, thank you, Aaron Thomas with the save.
Oh yeah.
Oh.
AT coming in clutch.
My life just flashed before my eyes. That was dramatic as heck.
No more coffee.
Thank you, AT. No more coffee for Aaron. That's right. No more coffee. You've lost your coffee privileges. Where's it going with that? Oh yeah, okay. So overnight session. Look at a typical overnight session for the SPY. You know, it gaps up, it gaps down, whatever. Look at last night. Nothing. Look at the range. This thing traded between 416 and like 418.35. That was the highest it got, or for 41. Sorry, it traded in a $2 range last night. Like no one wants to do anything into this Fed meeting. It's all that matters. Volumes are down. Activities down. I mean, look at the volume today. I mean, it'll catch up after 2 o'clock, but just look at the first half of the day. No volume.
Oh shit! Happy birthday, C6 Zorler Taurus gang.
What?
What?
What are you talking about?
He said it's my birthday today.
Oh, I missed it. You said that in the chat?
Yeah.
Hey, C6 Zorler. Happy birthday.
Easy Mike, thank you. Although it is not my birthday yet. Homie hit the exclusive Braun pen before. I don't know what that means.
Brand?
Brant.
I don't know what that means either. Yo, thank you, ATEC, for the segue there. Let's talk about Starbucks, man.
Well, hold on. Someone else asked about
Sorry, what?
shorted Starbucks on that spillage. That's funny.
What? What they ask about? I want to talk about Starbucks.
Hold on.
The Starbucks report seemed really bad.
We
to
will.
me.
We will.
Okay, good.
But someone else asked about something before, and I want to go in order here.
All right, fine.
Doobie Trouble. Double Trouble. It looked like Doobie. I'm sorry. Like that's not just where my head is at. It looked like Doobie on the screen. So it's Double Trouble. Can you guys take a look at Mito? It's been sliding forever, but got really big volume spike yesterday. What do you think? So volume spike does not always equal price increase, because it could be a volume spike can be increased selling too.
There must have been news, right? Let's go to the news feed. There had to have been. From Monday. Whoa. Wait a minute. Okay, so they had news Monday.
I'll be completely honest. So I didn't know what this company is. Just looking at the ticker, it's a biotherapeutics company. Not my strong suit, the biotech industry, and everything in that industry has just been so weak. I mean, you can just look at XBI or what's the other one? IBB.
No, but hold on. So Aaron and I both don't know what this company does. Looks like they had some drug data out.
Speak for yourself.
You just said you didn't know what the company does.
I don't. But I don't like that you just implying I don't know.
Okay. I would say, I hope, who asked about that again? I hope whoever asked about this is following the story. These drug PRs can often be very misleading. A company will do everything they can to make it sound positive, even if it's not. So I don't know what this company does or even what this drug does. I mean, I know now because it says so, right? It's macular degeneration, but that's all. I never heard the stock before you just brought it up. So they have a phase 2 trial. Phase 2 indicates, all right, we're pretty far down the pipeline here, right? There's only one phase after phase 2, and it's phase 3. So if you're failing the phase 2, I mean, failing any phase is never good. But the later you get, the worse it is if you fail, right? Because you're closer to the finish line. So phase 2 trial. I don't know what is this. Here we go. Did not meet primary endpoint. I don't even care. I don't know. I don't need to know what this company does. I don't. I just need to know those magic words. If you're buying biotech stocks and you don't know what those magic words are, meet or did not meet primary endpoint, or secondary endpoint, you need to know that stuff. That's all that matters. It's the 4 magic words of biotech. Or 3 magic words. Meet primary endpoint. Did they or did they not? They did not.
What are the other words to search for in other companies filing? It's like if you report for what's that term we discussed like a couple weeks ago when companies are close to going bankrupt?
Going concern?
Yeah, concern. There's also like if you search for adjust or there's like a couple other words that this isn't biotech specific, but just all company reports that you can like search for to find red flags.
Okay, I don't know how this got on your radar. Do you remember who asked about this? I don't remember how this got on your radar. We don't know this stock from a hole in the ground. So take what we say with a grain of salt. It's worth 28 cents. So the most you can lose is 28 cents if you buy a share. But I mean, this is just this is reverse. It's not even a reverse split. It's just down. I mean,
It's down bad.
this is the definition of a moonshot. If you're in this thing, this is a literal moonshot. Maybe it comes back one day, but probably not. I'm sorry. That's the truth of it. Okay.
Yeah, and Jay Rice is saying it's a 28-cent stock. Why are you even looking at it? I agree. I mean, if a stock's that cheap, it's crazy. If you look at statistically, like stocks under $1, the vast majority of them go to zero or just continue go down. Very rarely do stocks under $1 end up actually rising in our any good investments. And that's not always the case. I mean, think about
I mean, AMD was $1 at one point.
Right. There are obviously exceptions.
There are exceptions. How low did Amazon get in like 2002?
There was at one point during like the COVID markets when everything was just ripping, where there were like only like a handful of stocks actually under $1. Like every single stock.
I know. That's how you knew things were silly.
Exactly. Every single stock under $1 had appreciated like enough to where it was over $1. And it was just because like people would see like, oh, cheap stock market going up. Stocks are going up. I'm going to buy this cheap stock. And it actually worked. Like people were like making money buying these like penny stocks just because they were cheap and everything was going up. And now that has changed. Things have changed. I guarantee if you look at any of these stocks that are like under $2, the charts look very similar.
Yes, that's unfortunate. Okay, there was a few more questions.
Daniel, I don't think either of them are going to the race in Miami.
Wait, what? Who? What?
Daniel, whose picture looks like is Max Verstappen.
Oh,
he's
not going?
Who? What?
Wait,
no, is Spencer or Mitch. Are you guys going?
Oh no, I'm not going to Miami. No,
Daniel's pro pick used to be Mason Mount.
I'll be in Maryland / DC. So no, I will not be there, but I will be watching as best I can because it interests me. Somebody asked about True Leave, and here's what I'll say. I'll bring up the chart. Here's what I'll say about True Leave. I thought I could have sworn I saw like a insider buy yesterday, unless I imagined that, which is always possible. But I could have sworn I saw like a big insider purchase in True Leave. Let me check the pro real fast. TCNNF.
I know Kim Rivers bought some. Or is that Cureleaf?
No, it's True Leave. No, I didn't. No, there was no.
I think she bought some like not too long ago, in the last year. Maybe not.
No, that's not what this is.
How's Asana doing? Speaking of insider buys.
Oh, I looked at that yesterday. So we'll go there next. But True Leave, okay. Again, as someone who's owned the stock for 2 years now, TCNNF. Again, it's gonna have to be a multi-year thing. Okay. Cannabis is growth. Growth is so wildly out of favor. I'm not going to sit here and tell you to buy the stock, even though I believe in cannabis as an investment, and I placed my bets with the largest multi-state operators, the 4 largest in the U.S. Right? True Leaf, Cresco, Cureleaf, and Green Thumb. Those are the 4 largest by sales in the U.S. That's where I place my bets. I still believe in cannabis. I believe that it will be federally legalized one day. I don't know when that day is. I was hopeful it was going to be in this administration. That appears to have been wrong or early. I don't know. I know there's some bills flying around Congress right now. But all I can say is I'm hodling. I'm not buying more. I'm not selling. I'm not doing anything. It's a small piece of my portfolio. It's like 2% of my portfolio. But even though I'm bullish, I'm not going to tell you to buy more. I don't know where you're in it from. I mean, I'm fortunate. Okay, I'm in it from like $8 or $9. All right, so I'm still up in it. But if you're in it at 30 or 40 or 50, I mean, it's really tough. Like at a certain point, and this is a good lesson. At a certain point, we all have to ask ourselves how much pain we can take, right? Like I'm not there yet on SoFi. I can take more pain than SoFi. If SoFi got to like under $1, I'd probably sell it. I'm not.
You're gonna hold on to it till it gets under $1, then sell it.
Well,
at that point, you're selling it for like nothing. Like, say you have 100 shares and it goes to 80 cents, you're gonna sell it for $80. Like, you might as well just hang on to it in hopes that it in
Nah.
10 years somehow.
I don't know.
You
I
don't
know.
need
The-
80 bucks.
The,
at
the
that.
opportunity cost of that. Anyway, I don't know how much pain you can take. I don't know when this is going to change. If we're entering a multi-year cycle where growth is out of favor, then it's not going to end well for cannabis. If we can't get it legalized, then it won't end well for cannabis. I don't know. It's such a cyclical business, man. Just look at the monthly charts. It's so cyclical. Whoops. Like this run up was stupid. Of course, we can say it now in hindsight.
Looks
but
like the market run into some resistance.
It was dumb in the moment too. Like I literally, like it was actually hilarious for me. I was up like 300, 400, 500% in these cannabis stocks. Should I have sold in hindsight? Perhaps. But again, that's not what I was in this for a long-term investment. So again, I'm still learning, right? Should I have sold? Yeah. Do I think about that a lot? Not really. Because I know why I bought it. But again, my take on cannabis is if you're gonna bet on cannabis, why not bet on the largest dispensaries? Why not just bet on the MSOS? The same idea. This industry has a lot of smart people behind it. Doesn't mean they're right. Doesn't mean I'm right. I could be wrong. At the end of the day, it's growth. Just consider it growth. Think about your portfolio in buckets. You have growth, you have value, you have dividends. That's basically it in terms of broad. Right? What kind of stocks do you own? Is it all growth? You're having a bad time right now. Is it a mix of growth and value? Dividends? You're probably doing a little better. So it's tough. What else? Okay, Starbucks. Did you hear what they said in their earnings call last night?
I caught snippets of it, but not all of it.
Biggest takeaway for me. I had a few takeaways. Number one, they are having a hard time keeping employees.
Yep. Turnover is high.
Turnover is very high. And when I hear turnover is high, I immediately assume stores closed or locations closed. Because how can you staff a Starbucks with like one person? You can't.
Right.
Right. So turnover is high. Second thing is, you know what part of their business is booming? Is the drive-through.
Right.
The drive-through is doing really well for them, but the rest of it is not. So when I hear that, my first thought is, okay, so more people are going Starbucks via the drive-through. Fewer people are just hanging out for hours at a time in Starbucks. Don't you think that the people that hang out in Starbucks buy more stuff than the people at the drive-through? Isn't that a safe assumption? Because when you're at a drive-through, what are the odds that you splurge on something extra? I think low.
Yeah, I get that. Like if you're in a Starbucks line and they have those like mugs and like take home stuff, yeah, but I feel like sometimes people like say you're just going to the Starbucks drive-thru to get a drink, and then you get up to the thing and you're looking at the menu and you're like, yeah, you know what, I'll throw on a bagel and a cake pop, you know? So I could see that happening too, even at the drive-thru.
Okay, maybe.
But not if they're mobile or so that's also the other thing is in
the mobile
app,
orders.
The mobile app is like it tries to encourage you. I mean, this isn't specific to Starbucks. It's any design of any like consumer facing app where people are buying things. It's going to try to encourage you like, oh, check out our new limited feature. Like I'll look at it right now and it'll show me things. So I wonder if they're able to upsell like what you're talking about.
You would have the Starbucks app on your phone.
Is pretty much upselling customers that walk into the store because you see things that are in there. I think they're able to do that with see, look, like the first thing I see when I log in here is like get your mom a Mother's Day card, and it's like, oh, that actually would be a pretty easy gift to get my mom. Like, actually, I don't know. Oh no, she'd use it.
My point was, you know who spends the most money probably is the people that camp out in Starbucks for 4 hours working, right?
Yeah,
probably.
Maybe.
Think about it. If you're in Starbucks for 4 hours, you probably get a drink here, a food item there, right? Another drink a little bit later.
Yeah, but the people that work at Starbucks probably have like some of those people that come in like every day from 8 a.m. to noon that just like order one coffee and sit there for 4 hours.
Maybe.
They're,
I don't
like,
know.
their least
I
favorite
just
customer.
this does not, and Howard Schultz said he's going to transition out of the CEO role. What do you say?
Wait, can you walk me through the Howard Schultz timeline? So he was the CEO, then he wasn't, and now he is again.
Yes.
And he's going to not be again.
He's not the founder of Starbucks, but he's the guy that took Starbucks from like a local thing to like this huge corporation. And he was the guy that was there as Starbucks grew into an international behemoth. And he stepped down. What was it now? Was it 2 years ago now? I think it was 2 years ago he stepped down.
He's like, a pandemic's coming in,
and
sounds
now
like a lot of hard decisions. I'm out.
Now he's back in on a temporary basis, but I think the timeline he gave was like Q4. He'll be out of there. I think that's what I remember. Anyway, if you guys recall, I own Starbucks. I bought it in the mom account. I bought it at when did I buy it? 80 something. Sold it at like 100, and I want no part of this.
You want no part of Starbucks?
I want no part of Starbucks. I'm so bearish. Maybe I should buy puts here. I'm so bearish Starbucks. I'm sorry. Like the transcript did not seem good in any way. It just seems like they got a lot of problems.
Yeah, I think even people that are bullish Starbucks are bullish despite some of these problems and headwinds coming up. And I'm kind of in that camp. I think even if the next couple of quarters are going to be tough for Starbucks and we're going to see growth continue to get hit, if monetary policy is just tightening in general, like not going to be great for Starbucks. But long term, yeah, sure, you got Dutch Brothers, you have a few other like coffee
I'm not
chains.
even thinking about that.
I'm just thinking long term, like Starbucks isn't go. Like I think there are some names where I can safely say like they aren't going anywhere.
Well, they're not going anywhere. Sure, yeah, they're not going to go out of business. Yeah, I'm with you on that. But I don't think they're going to be. Should have bought puts when I sold. Hey, should have, would have, could have. You're right.
I mean, I just
and the unionization. Thank you, O10 Clan. That's great for workers, but not great for the bottom line.
I would need to do more study on it, but I've seen some data coming out showing that public companies that like weren't unionized, that were unionized, the stock return don't end up dropping anything like significant. Again, I don't know what the exact numbers are, so I'll do some more DD on that. But think about it, like you just said, one of the top concerns Starbucks pointed out to in its call was can't keep workers. What do unions do? Help you keep workers. So even if you end up having to pay like higher wages or more benefits, if it lowers turnout and increases productivity, it can end up being a net positive. But definitely an investor concern because it's just like with the overall market. Anytime there's uncertainty, investors don't like that. So the fact that there's this uncertainty out there with is Starbucks are all Starbucks going to be union, whatever. There's just that kind of cloud of uncertainty. But it's not specific to Starbucks. I mean, Amazon just had its second union vote this week, which
rejected, right?
Rejected. But if you look historically, like that's actually very common for one location to unionize and then the second one to reject it, because in that time from the first one unionizing, the company will come in, Amazon in this case, and kind of ramp up. It's like, oh shit, we got to like take this more seriously. So they're going to ramp up their like anti-union messaging and whatnot. I forget where this Amazon one, where it took place. But I don't think it was even close.
It was the Staten Island one.
Yeah.
Yeah.
No, that was the first one that unionized. I'm talking about the one that they rejected this week. Maybe not.
No, I thought that was Staten Island.
Where was the first one then?
Alabama, I think. No,
I think maybe they were both in New York City somewhere. But Starbucks actually first store unionized, second store voted and rejected. Because same thing, Starbucks came in and started saying like, oh shit, we got to take this more seriously. So I don't know. I mean, either way, like if I own Amazon and Starbucks stock, like I'm not selling either of them just because they're unionizing. I'm not saying like, oh, it's gonna be good for the stock. I just don't know. I mean, like I don't know how bad Brooklyn. Okay, so one was in Brooklyn, one was
Alright.
Staten Island.
Sorry.
No, I think you were right. I think Staten Island one was the second one that rejected, and the first
Yeah.
one was Brooklyn.
I think that's the only reason people go to Staten Island is because they work at the Amazon
The Union?
fulfillment. No, they work at the Amazon fulfillment center there. By the way, I want to talk about Roku here. Did you see the Roku headline from yesterday? Roku is going to team up with a private equity firm, I think Apollo. They want to place a bid for Stars,
Okay.
like the channel. How unbelievably far behind is Roku in terms of content? They are so far behind.
I don't know, because they're not the same. They're not the same as like Hulu, Netflix.
But they're trying to be.
Kind of. Like they're an intermediate. Like you go on Roku. Like I use my Roku software to get to Hulu, to get to HBO.
Roku,
So
okay.
it's not the same. It's like a conduit to those. But if they also
No.
want to offer that, like offer a Roku streaming channel
They have that now, but
with
Roku-
content, I didn't know that.
not original content. Think about it. Roku is the same thing as Apple TV and Amazon Fire Stick. They're the same thing. Okay. What does Apple have? Apple TV Plus with good stuff on there. Not that I would know, but I hear things.
Okay.
Um,
Ted Lasso, yeah.
Yeah, I hear things.
Morning
Right.
Show.
Exactly. What does Amazon have? Amazon Prime Video. What does Roku have? The Roku channel with basically nothing on it. Now they're gonna buy Stars or do a thing with Stars. Come on, they're so far behind the pack. It's not even funny.
I don't know. I think Roku would almost be better off not trying to go that way and just kind of embracing
they are.
what it is, and it's like more of a software. That's Roku's biggest value is like originally, yes, Roku came as a USB device you would plug into the TV, and it was essentially the same exact thing as an Amazon Fire Stick. Amazon actually basically just ripped that straight from Roku. They were like, "Oh, that's a good idea.
Yeah.
We can do that." And then Google has Google Chromecast, which is also very cool and effective. But Roku's value in its stock and its company, the only reason it's able to grow to this point where it is because of it through its B2B deals, right? Deals with TV makers like Vizio and Samsung saying, hey, if you can put our Roku software directly in your smart TV. So now when you buy a TV from Best Buy, you don't need to go buy the Roku device. It's already built into it. And I want to say, I don't know off the top of my head, but some crazy percentage of smart TVs sold right now have Roku installed in them. So I think if Roku just leans into that and saying like, oh, any technology out there, we can try to leverage one of those B2B deals and get our software built into the product, that would be more effective than Roku than trying to do like content streaming.
I think if you are invested in a growth stock and you are getting punished in the last 16 months, ask yourself, like, not just about the company, but about the industry, about the space that they play in. Are you bullish the space they play in? Like, for example, cannabis. I'm bullish cannabis. All right. It's growth, but still bullish. SoFi. I'm bullish on fintech. Am I bullish on like a streaming connected TV platform when Roku is competing straight up against Amazon and Google and Apple and Netflix? No, not really.
What is Google's not doing anything content? Well, I guess they have YouTube.
Well, they have the Chromecast.
Yeah, but that's not. I'm saying Google's not. Like Amazon and Apple are obviously like, and Netflix are investing a lot.
Google's not doing it yet.
Yeah, they probably will.
They probably will. I'm sorry. I can't. I'm trying to picture the bull case in my, like, everything you just said, and all I heard was competing against Amazon and Apple and
Well, that's what I'm saying, that I don't like getting into this field. Like you're saying, they're already behind so much. To me, just like doesn't really make sense as a business. Netflix. So okay. Here's what I think is kind of the macro sentiment on Netflix. Yeah, okay. Google has YouTube TV, but do they have?
By the way, everything I hear about YouTube TV is amazing.
Oh, it's great.
I've yet to hear someone.
I've used YouTube TV for the past like 3 years.
Oh, really? I didn't know that. I've yet to hear a bad thing about YouTube TV.
They almost lost ESPN. That was stressful.
Oh, all right.
For like a
wait,
week.
how much do you pay?
I don't
Like
know.
50.
I don't pay, but I think it's like $55-$60 a month.
All right. Fair enough.
So Netflix, here's what I think.
Let's go to that.
Kind of from a macro sentiment standpoint is going on with Netflix. And I'm speaking this as an anecdotally, like soon to be 25-year-old, just from like my friends and stuff. When Netflix was when its service was like, oh, here's a bunch of like old TV shows and movies. You can watch as much shit as you want. And like they're like The Office is on here, and there's like some some like shows that people can always go back and watch, and it was like $7.99 a month. Like that's a pretty good deal, right? You have this access to this whole library of old shit that Netflix paid to license out. But now it's completely different. Now you're paying like $20 a month for this Netflix original content that they're producing that like, sure, some of it's good, some of it goes like viral to where everyone's talking about it, like Tiger King, and you just like gotta watch it. But
most of it, let's be honest,
most of it is shit. And so instead of paying a little bit for this like big library of old shit, you're paying a lot to get this like new shit shoved down your throat that may or may not be like your cup of tea or any good. So the service, like the actual service that they're providing, the good that they're offering has changed.
Yeah.
And from a business perspective, like paying to license out some old content like Office that people are going to watch a bunch versus putting millions and millions of dollars into productions like Don't Look Up and which I don't even know. I mean, Don't Look Up did well, right? I think it did well at the Oscars but from a business perspective, like, is it driving subscribers? Is it bringing revenue in? I don't know.
So there's problems with both of the things that you just described. The problem with buying the third-party content is if you lose it, then you lose the subscribers with it, right? Like Netflix lost The Office, right?
Yeah, and then they've gotten and lost like big shows. Like at one point, like Friends was on there. I don't know if it still is.
So when you lose it, that hurts. And it's so funny we're talking about Netflix original content now, because I had the same conversation with my dad, I don't know, like 6 or 7 years ago.
Okay.
And we were going through like the Netflix like library. And he was like, Spencer, this all looks terrible. And I went, no, Dad, you don't get it. Netflix does like amazing stuff. And now here we are a few years later, and I'm like, wait a minute, he was right. Most of the movies are bad. A lot of the shows are bad.
I'm trying to think of like Netflix originals that have actually been like very good. Tiger King, probably one of them. But HBO, I agree, makes very good shows.
If I had to pick one streaming service to own and only one, it would be HBO, and it would not even be close.
I might do that. I'm paying for too many things right now.
I pay for two. I pay for HBO and I pay for Hulu. I should not pay for Hulu. I should get someone else to.
I don't even.
I don't know, man. Hulu's. I pay $13 a month for Hulu. I don't know why I do that.
Wait, I can't remember now. My Spotify used to come with Hulu, and it doesn't anymore. I had like the best student deal ever. It was $5 a month for Spotify and Hulu. Ozark. I haven't watched Ozark. No spoiler. Well, I haven't watched like the new.
Okay, yeah, please no spoilers. I have a few episodes left. Julie, say nothing. Julie, say nothing. I will boot you from this chat if you spoil the last few episodes. I have 2 episodes left. By the way, have you seen Tesla today?
No.
The stock is relentless. It really is.
Yeah, I mean, but that's reflect. I mean, you look at the Qs chart; it looks very similar.
Yeah, you're right. You're right. Whole market.
Although the Qs were running out of steam here a little bit, but I mean, guys, we're what, an hour away from the Fed meeting. I expect volume to be pretty low in this next hour as people are just kind of waiting, anticipating the Fed statement coming out. Although I wouldn't be surprised if we see a jump in options activity in the last like 15 minutes before 2 p.m. Just people trying to play a bounce there.
Perhaps. All right, I just got word. Oh, I heard about that, Ryan. I heard that's the new It show. That's the new like hot show that everyone's talking about.
I can't keep up with it. Like everyone was talking about Succession for a while. Like there have just been these shows where like I'll log on Twitter and everyone seems to be talking about it. And if I've missed the boat, then I'm out already.
All right, I don't even have Apple TV Plus, so it doesn't matter. I just got word Jesse Kaylor cannot come on the show today.
Oh man,
he said he sprained his ankle. do we? He sent me a picture though, so he has
I know,
proof.
but
But-
is he like going to the ER for it? Like,
I don't
why
know.
can't you get
I
on the
don't know.
show then?
Don't you know you can't trade with a sprained ankle?
I guess so. Well, maybe we just wrap up early today.
Maybe. Well, we have the roadmap at 2. By the way, here's the calendar for earnings the rest of the week. eBay, Twilio tonight. No Uber. They jumped the gun on us, so ignore that. But Etsy. Hey, how's Etsy doing? Where is Etsy below? Like, what is it? Is it below like $80? No, it's not. Okay, it's below 100 though. Yo, I remember talking to somebody at Etsy in the summer of 2020. Their business was booming.
That's like people put their own brands on there, right? Like if I
Yeah,
sold
yeah.
candles, I'd sell them on Etsy.
Exact or soap.
Or so
Yep. Tchotchkes. Guys, there's no way the Etsy report's going to be good, right? There's just no way. TripAdvisor is tonight and bookings tonight. Fastly, Fortinet, Corvo. Tomorrow morning is going to be a big one too. Oh, I got word today. We are going to be talking to the CEO of Penn National Gaming. I don't know when though. We had Jay Snowden on the show a few months back. We're going to have him on again. I think not for a few weeks, but we're gonna have Jay on the show. Tomorrow morning, Royal Caribbean, Shopify, Papa John's, Anheuser-Busch, Wayfair, Datadog, SeaWorld, Kellogg. A lot to digest there because you have growth tech like Shopify, e-commerce like Wayfair, Datadog, which is cybersecurity. You got travel with Royal Caribbean. You got consumer staples, Kellogg's and Papa John's. A lot going on there. Now everyone's talking about shows in the chat. Speaking of shows in the chat, I hope you all saw that they dropped the Obi-Wan Kenobi trailer today on Disney Plus. That show comes on in 3 weeks, and I'm very excited for it.
Yeah, I know some people whose whole bear case or bull case on Disney was based around like
Obi-Wan
Mandalorian and the Star Wars franchise.
That's not good enough. Sorry.
It's not good enough for you.
No, I mean that's not like
Whatever happened to Mandalorian? That's another
You-
show
you-
that I feel like people talked about like a lot for like a month.
You should not put a bull case on a content company because of one show. No IP is that big. Not even Star Wars.
I don't know. Game of Thrones was pretty big for HBO.
No IP is that big to drive an
Come on,
entire
you-
business.
If you take away Game of Thrones, that has to bring HBO's like valuation down a little bit.
No,
I guess they spent a lot of money.
no
on that
IP
show.
is that big. I'm sorry, can't be. You know who I'm surprised? Happy just mentioned Better Call Saul because I've been watching that as well. AMCX. Nobody bought AMC. You know, AMCX is still around. That's AMC Networks. Nobody ever bought this stock. I kind of thought they were gonna. I'll bring it up on the screen. AMCX and Lionsgate, the movie studio.
AMCX did Walking Dead, right?
Yeah, Walking Dead, Breaking Bad, Better Call Saul. Nobody's bought this stock.
So they have a history of
Nobody's
making,
bought
like,
this company.
hit shows.
I'm surprised that like
Dude, I kind of like this. Buy it for a takeover target. The Morningstar Fair.
no, because Dennis and I were speculating about this 2 years ago, or 3 years ago.
Yeah, but now you know the valuation's gonna drop. It's not as expensive as it was a couple years ago.
I mean, no, it's not necessarily true. Oh yeah, it's got a PE of 4.
yeah. See,
Forward PE of 4.
I think this is for sure a takeover target. Netflix, Google, you name it.
I'm just surprised. Like Google hasn't come in or Amazon hasn't
Right.
come in.
I think it's on the table. And I think if not, like there's a chance the stock appreciates regardless. Wait, it says it was founded in 2011. When did Walking Dead come out?
No, that's not when it was. That's not when. That could be when like
The stock.
the split happened between AMC and the AMC theaters and AMC networks. I don't know, but
I'm interested. I'll say
Really?
that much.
all
Yeah.
right. I know.
I mean, people are investing in content right now. Whether it ends up
I know.
being
Well, that was the logic.
But I'm just saying whether it ends up, in 10 years, it'll be clearer if Netflix investing millions and millions of dollars into content and, buying so-and-so studio and...
Wait, you see this comment?
Yeah. That sucks. Maybe not. Maybe it's not going to be a take. See, that's even more. Reed's saying to our point. It's the interest is there. They're just being stubborn. Reed, what was the holdup? Was AMCX just asking for too high of a price?
Holy crap!
What was the holdup, man?
That just made my day. Oh, that was great.
We should get someone who specializes in like arbitrage, like M&A arbitrage traders.
Oh, that was wonderful. That's great.
I like that we have people that actually worked in banking and stuff in the chat, though.
Reed, I would agree with you. I was futzing around with the AMC app on my Apple TV the other day, and man, was it bare bones.
Outside of those like big,
outside of the headline shows, whew, was their catalog light, extremely light. So Amazon just bought MGM Studios, which is basically what? Just James Bond and a couple other random things, for $8.5 billion. All right. What is AMC's market cap? AMC Networks. AMC Networks market cap is not $8 billion. It's $1.4 billion. Is MGM Studios really what is that? Like 6 times more valuable? Like, math is hard. It's 5 times more valuable than AMC Networks. I don't know. I'm just asking. It seems like if MGM Studios can get $8.5 billion, AMC Networks could get what? $4 billion? No? Reed would know.
Ooh, Reed, that's a good point too. You got to think about some of these shows are shows you actually have to like sit down and watch, whereas some are ones you can just put on and have playing. So like Netflix probably benefits from people just putting on the Office and just letting it play instead of actually watching it.
Yeah, that's true. Yeah, background viewing is single-handedly keeping keeping
Netflix.
Keeping broadcast TV alive. Like cable news.
Yeah.
Think about who watches cable news.
People don't actually watch it. They just like have it on for background.
Doctors' offices and airports.
Yeah.
Right?
But AMC Studios obviously has that track record of like 1 in every 10 shows they put out just being an absolute hit between Walking Dead and Breaking Bad, because Better Call Saul's a spinoff of Breaking Bad.
And it's over.
Right.
Well, over in like 2 weeks.
What about someone said they were in Paramount for the takeover? Is there actually a deal announced, or is it just
for
speculation?
Someone's gonna buy Paramount? Someone's gonna spend $25 billion on Paramount? It's worth
massive studio content. And they also own the rights to, or CBS owns the right to Champions League and some other big sports.
They said that on the call. I think that they need. Well, they need to. That's the only way.
They need to what?
Break into live sports.
They already are. Wait, CBS, Paramount, and CBS are the same, right?
Yeah. Yeah. No, but like I'm saying like Paramount Plus. Like
yeah.
That's what I mean.
So if you have like a Paramount Plus, I don't know exactly how it works, but you can watch like the Champions League. There's a Champions League game today. Wait, let's see how many people watch Champions League semi-final. And like I'm pretty sure literally the only way to watch this like legally in the US is through CBS.
Oh wait.
Yeah, okay,
wait.
For context, the Champions League final had 380 million viewers.
Yeah.
The Super Bowl had 115. So about 3 times the amount of people viewing the Champions League final than Super Bowl.
Yeah. Well, there's more to live sports than just NFL and hockey, Reed. But That's the only way, unfortunately, to really break in and separate yourself is by having live sports. And unfortunately,
There's only 4 big sports leagues in the U.S., but now you have, like I said, like Champions League and some soccer is becoming more watched in the United States. You obviously have F1 becoming more watched in the United States. You have, I don't know why, I feel like WWE and wrestling has kind of made a comeback. UFC is getting bigger. You have other
wait.
sports.
How is that stock? I haven't looked at that stock in a year, probably.
Which one?
WWE. Hey,
It's holding up. I'm telling you,
Wow.
it's like making a comeback.
holy
Like,
moly!
people are watching wrestling all of a sudden. But I agree, Reed, that like out of those 4 MLB, so it's weird because not all of the leagues do like complete exclusive rights. Like MLB gave Apple Friday night games, and then you have like some games on ESPN, but then you also have TBS. Who runs TBS and TNT?
That's Viacom.
So they have
Or
rights.
Paramount, sorry.
They have rights to
Right.
See, wait,
Isn't it? Yeah.
CBS. So yeah, they have March Madness.
Yeah.
They have MLB. Like once the playoff starts for MLB, it's going to be on TBS and TNT, not ESPN. Well, maybe ESPN will still get some games.
Wait.
But basically, the rights for a lot of these leagues are spread out through different companies. It's not really like, NFL. I mean, they even did the same thing with Amazon, where they branched off Thursday night for Amazon, but then obviously Fox and CBS still have the regular games. But then also DirecTV has like the rights for Sunday Ticket. I don't know. The whole
think I
sports
lost
rights thing is a
Well, Chris is mentioning that Paramount Plus had a nice quarter. They gained 6 million subscribers. Paramount Plus did in Q1. So my question for you is, what is worse for Netflix here? The fact that their competitors, HBO, Paramount, Peacock, Disney. Well, Disney didn't report yet, but the other 3 all gained subscribers last quarter, and you didn't, or if everybody would have lost subscribers, Netflix could say, look, it's an industry-wide slowdown. What is worse?
Well, I mean, we're talking about sports right now. That's like the big difference right now is Netflix has no live sports, whereas at least some of these other platforms are have something to offer in terms of live sports. Like if I'm between opening a Paramount Plus subscription right now on Netflix, and the tiebreaker is that there's some good sporting events on Paramount, so I can watch Champions League without having to go try to find like an illegal stream on some website that's going to break my computer. That might be worth it. So Netflix really here has a few options to kind of change the story on where its company and where the stock is heading. And that is one way to try to make a big investment in live sports. Reed is pointing out that it's going to be difficult because a lot of the big leagues have made these deals and the negotiations have been going on.
Yep.
And, I'm sure that even when like Apple signed its deal with MLB, those talks took a while. So,
all right. If anyone watching wants reliable links to pirate live sports, shoot me a DM. I have found very reliable.
Are you just gonna give them my site that I gave you?
No, I don't know your site. I have found in the last year I have found 2 reliable, one for football, one for baseball. I found 2 pretty reliable sources actually, and one for college basketball. So 3. So
who owns Hulu? I know Disney.
Disney owns Hulu. Disney bought out. Hulu was a joint venture between Disney and Hulu and somebody else, or Disney and Fox and somebody else. I think, yeah, I don't know. And Disney just bought them out. So Disney owns Hulu now.
So the other thing Netflix can do, which this has been talked about a lot, is adding an ad-based model where it's okay. Instead of paying $20 for Netflix, you can pay $5 a month, but then you're gonna get ads. There are a few different ways. And then another thing that Netflix has talked about in the past is getting into gaming more, which like, I don't know what that looks like or how that's played out.
We don't know yet.
Well, they've licensed out for Stranger Things video, but that's a lot different than being able to like rent video games on Netflix. So there are different ways Netflix can make the company and the stock exciting again. It's just to be determined what and when they will do some of these things. But live sports, to me, like, man, Netflix, if they would have started like negotiating with some of these leagues 5 years ago and worked a way to get some football games or baseball games, I
you
think
can't negotiate while they already are under contract. I don't know how it works. I'll be honest. I don't know. Let's move on from this conversation. I'm Netflix. I'm streaming down for now. Did you all see this headline this morning out of Bloomberg? I didn't realize this. The FTC, I'm sorry, FINRA, excuse me, FINRA has proposed a new rule that would make it so only accredited investors can buy or sell certain leveraged and inverse, basically complex ETFs. So leverage ETFs, inverse ETFs that we talked about yesterday with Dave Mazza. That I didn't know about this. I learned about this today for the first time. I will say this: if you have an opinion and you want to express your opinion to FINRA about whether or not the average retail investor should be able to buy or sell leverage inverse ETFs, you have until May 9th, which is what, Monday? You have until Monday. The comment period ends May 9th. And after that, FINRA will make a decision. But I don't know how I feel about this. I mean, I don't think I feel good, honestly. Full disclosure, you guys know that we've been singing as friends with Direction, and we do a sponsored segment on this show. But even still, I mean, caveat emptor, right? Know what you're owning. Know what you're buying. Buyer beware. If you buy something and you don't understand how it works, I think it's your fault. So I can't imagine this rule actually goes through, but if it does, man, that would just be a huge bummer, I think. These leverage and inverse products, they only exist because there's a market for them, right? Because these firms like Direction and ProShares and the other ones, they launch and they close new funds all the time. Because if there's no market for it, then that's the market decides. But there's a market for these funds, and cutting out the retail trader from this is not the solution. No, it's FINRA. Wait, what are you talking about? What are you talking about, Greg? It's FINRA. What are you saying?
All right, Spence.
FIRNA.
Enough with the FINRA talk. I'm gonna talk about my trades. So I was talking earlier about how since the Qs were already down 1.5% when we started the show, I was playing for a bounce. I did get into some calls. They're up 80% right now, but now I'm worried because my whole point in playing the calls was for a reversal when the Fed statement came out.
But we already had it.
We already had the reversal.
That's not good.
So I think we're gonna see the classic double reverse. You know, when
double reversal?
Yeah, when football teams run the double reverse jet sweep. I think we might see a little bit of that.
Oh.
But I really don't know. I mean, I'm still holding the calls because I'm like, because here's why. Because if I sold the calls now for the 80% gain and then we ripped after the thing came out, I'd be pissed at myself. Whereas if we reverse, I'll be like, gave it the old college try. Gave it my best shot.
Okay. I'm rooting for you, man, as always.
Hell yeah.
I'm rooting for you.
I think if we're going to stay live till...
We are going to stay alive until 2 o'clock.
We should go a few minutes past so we can get the reaction.
Okay, and then, so here's what's going to happen at 2 o'clock. It's going to be a bit chaotic over here. We're going to end our show. We're at 2 o'clock, give or take. We're going to redirect this stream to the roadmap, which is our NFT show, which is every Tuesday, Wednesday, Thursday after this show. Separate from that, at 2:15, we're going to start the stream for the Jerome Powell press conference. That itself, the actual conference starts at 2:30. We'll probably go about 45 minutes. And that'll take us into at the close at 3:30. So we're going to have 2 streams going at once. I will say, I don't know if you saw Elon Musk's Twitter this morning.
Dude.
But he did a thing.
Okay.
And the roadmap crew is fired up about it.
What'd he do?
He took a giant shit on NFTs today. It's basically what happened. He changed his profile picture to a collage of Bored Apes.
Man.
And then he said, looks pretty fungible to me.
Oh man, see that's tough probably for the NFT. What do we want to call them? Just I guess the NFT bulls, NFT community, because I guarantee you the crossover between like people that are in the NFTs and that are really
I love Elon.
Love Elon.
It's high.
That Venn diagram is there's a big
it's
overlap.
a circle.
It's just a circle, right? So the fact that like the guy in their community that they all love is kind of shitting on their thing, they probably don't like that.
Yeah, no.
I love that from Elon. I'm so glad because to me, if I had to guess, Elon I would have guessed he'd be a guy that would have tried to like somehow make some money off the whole NFT thing, but I guess he hasn't. He probably could, honestly. Like,
he sent ApeCoin ripping, and maybe we should do a crypto update because I know he sent ApeCoin ripping after he changed his picture.
Yeah, this was more fun when like all we would talk about was Elon is like which crypto was he causing to like spike or drop based on his I mean, at the height of Dogecoin, Elon Musk had millions and millions of dollars just at his whim whenever he tweeted, right? Like he could cause it to go up 10%, down 10%.
Yeah, but the SEC and Finra are concerned about leverage ETFs.
Right. Well, it's also I don't think is the SEC. Do they have jurisdiction over Dogecoin?
No, that's the point. No one does.
Right. So I don't know. But yeah, they're all what's Reed saying? They're all rich AF celebrities and influencers that own. Yeah, I mean, and that's actually the other part that I like about Elon tweeting this is like people like Jimmy Fallon and Paris Hilton probably see this and they're like, like he's not playing along. He's not. Like doing what he's supposed to do.
Dude, this is the ultimate network effect thing happening, right? Everybody only owns these because cooler people own them, I think. That's sort of where I'm at. Like, I don't know. I'm referring to specific NFTs, like Bored Apes, right? NFTs as a whole, like the ones that have utility, there's going to be a future there. But the ones that are just like cool in the moment,
well, that's why with NFTs and crypto as a whole, I think we get swept up like anything else nowadays, or maybe it's always been like this. You get swept up on like one side or the other. You're either like bullish and bearish, where it's like I can think crypto is like here and here to stay, and there will be utility. Like Bitcoin will have a utility, whatever. Maybe we'll see that develop over the next one. But I can think that and like think Bitcoin has a future and still think it's overvalued or it's not worth what it's at right now. And that's where I'm at with NFTs. Like you're saying, like the NFT projects that have utility, there will be things that come out of the blockchain technology that's going to be like really cool and really useful. But does that mean I think a picture of the monkey's worth like X amount of millions of dollars? No, of course not.
The monkey.
Of course not.
The monkey.
So I don't know.
Right.
I mean,
all right. Speaking of Bored Apes and ApeCoin, do you know where you can buy ApeCoin? On Voyager. Speaking of Voyager, let's do our first crypto update of the day. Risk is on today. Green across the board on the crypto heat map. Everything from Bitcoin to FTX coin, SHIB, Doge, Cardano, Solana. It's all green on the screen. Not bad. It's been a while since we've had one of these days. Just wholly green. Maybe the crypto market thinks Uncle JJ is going to go dovish, or probably no idea. But hey, if you want to buy any of these coins and more, including the effervescent
good word.
ApeCoin.
Isn't that a band?
No, I said effervescent. I don't actually know what that word means.
It's a band.
Evanescence?
Oh.
All right. Check out Voyager, guys. You can sign up using the code ZING. And when you do that and fund your account and make a trade, they will send you $50 in free Bitcoin just for signing up using our code. ZING. Check it out. All right.
All right. Qs need to pass their previous high of the day, which is about 30, 40 cents away from doing so. If we do that,
We're 25 minutes from the Fed announcement. And we're an hour or so from the press conference. Things are just going to get quieter. The next 25 minutes are going to be really quiet. And then this is all right. So this one's going to happen, right? And it's funny if anyone has their trading platforms open, what you should do is watch the ladders at 159. Just pull it open and watch what happens at like 159.50 or 55, right? All the bids and offers evaporate. Nothing. And then the PR hits and the computers read it in a split second, and then boom, 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 boom.
Spencer, computers can't read PRs.
Yes, they can.
Damn.
And they do. And that's why you always see reversals, because the computers read one thing, and then by the time the humans have time to like digest it, it's very often something different. You can count on at least 2 to 3 reversals between now and the end of the day. So we haven't talked about the dollar at all today. How was the DXY doing? Whoops. Wait. What's the UUP, right?
Yep.
Is dollar
Down
and then
11 beeps.
And what? No. And then what's the we don't have Forex, do we? On Pro? No. Because no one trades Forex.
Besides Shelly.
No one trades Forex.
Besides Shelly.
Yeah. All right. Oh, Apple new high of the day. Apple new high of the day.
Hell yeah.
What else jumps out to us here? How's Match Group doing? Their earnings report seemed pretty bad as well.
Yeah, a lot of executive turnover over the past 2 years with Match Group.
Wait, look at this. So look at Match. It's basically been bought straight buying power off the open. And then did you see what was it? What was the other one? Shoot. Oh no, there was another one that I want to call out that got crushed overnight. Oh no, Chegg. You see Chegg today? CHGG? The one that got crushed yesterday?
Mm-hmm.
Look at Chegg today. Up $2, up 12%. If you bought Chegg yesterday, you could have bought this thing for $15 yesterday. And it's at 19 a day later.
Crazy.
It's a nice trade. There is some serious buy the dipping happening in these beaten down. Like, look at Teladoc too, right? Now, today, it's not going to close green. Probably. Actually, very well might. I don't know. But look at Teladoc since its earnings report, right? If you bought it that first day, you had that first day, second day, third day, 4 straight up days in Teladoc. There is serious buying the dip happening in these beaten down names. I don't know why. All right. I fear I have like exhausted my list of topics for the day because
I have more. Spencer.
You have more because I thought we were going to talk to Jesse.
I came prepared,
and now we're not.
I came prepared.
You came prepared?
Yep.
All right. Hey, producer Rohan, are you around? Is he here? Is Rohan here today? I haven't seen him at all. Let me make sure someone gets the Fed stream set up and ready to go.
Hold on, I'm trying to log into my. I shouldn't say my. I should say our. Benzinga.
Wait, so New York City is suing Activision? I don't care.
Why?
Why don't I care?
No, why? Oh, for it's like employee lawsuit.
Yep.
Discrimination.
Yep. Misconduct. Yep.
Classic.
Oh wait, no. This is a Oh, they're suing Activision because they're claiming that they rushed into the Microsoft deal to escape liability for the CEO's misconduct.
That's fine.
That's interesting. I mean, as a shareholder, yeah, that's fine.
Right. Sell it while you can. Sell it before the shit gets out.
Yeah. All right. What's the chat talking about? I don't know. I'm kind of in Friday mode right now. Just chilling.
Oh, sorry. I have.
You have. Yeah.
Yeah. I'm just trying to log into our.
Okay. Well, while you do that, we got to ask about Shopify. I took a stab at this one. Who asked about Shopify? Diego. I took a stab. I saw it stop going down. Look, it bottomed at like what 600 or something. So I took a stab. Where did I buy it? Where did I buy it? Trying to remember. I think I bought Shopify. It was around here, right? Middle of April. I bought it at around 600. And that didn't work out for me. So
All right.
I sold at 500. So I still believe in the company. I don't own it now. But man, growth is just really, really hard to own right now.
Whoever asked
so
this,
I'm
Diego asked for the outlook on Shopify. I'm not gonna speak for Spencer, but basically my outlook on anything, not anything growth, because I think there are some like companies that get lumped into growth that are not great companies that I wouldn't want to invest in.
Just expect more pain.
Just shitty. Yeah, you can ask me like any good growth company, which is the category I would consider. I would put Shopify in a good growth company. I would say short term, expect more pain or choppiness. Long term, good level to start a position in.
Like, best case scenario is that Shopify doesn't go down. Like it stays flat. I don't think you can expect Shopify to really go higher, like pop on earnings and then hold those gains. What's the expected move tonight? The expected move is 12.5%. So wait, what does that come out to in terms of dollars?
Like 55, 60 bucks.
50, yeah, $50. 10% is 45, so let's call it $50. So can Shopify pop tonight or tomorrow morning on its report? Yeah, for sure. Is it going to hold those gains? I don't. Not unless Jerome Powell says that he's printing money again today.
Which I don't think he's going to.
No, he's not. So,
but yeah, I mean, like long term, like
you can like the business.
10 years, and this is not investment advice, but Diego, in 10 years, do I think Shopify's share price is higher than it is today? I do. Does that mean I'd be rushing to go buy it today? No, I think you have time to wait a little bit. So we'll see. I could be wrong. I hope I'm wrong. I hope I'm wrong that there is no more pain in the short term. That Shopify reports great earnings and the stock's up 10% tomorrow and it continues going up.
All right, what was your stock that you wanted to talk about?
So I wanted to talk about. So this was a list I saw from I think Business Insider. Yeah, Business Insider put it together, but it's from Goldman Sachs's. Let's see, Goldman Sachs chief U.S. equity strategist, David.
Okay,
Kostin.
David. I was gonna say I know him.
Kostin.
Yeah.
Yeah, I think he goes on CNBC regularly. Or...
Yeah. What does he have to say about a recession?
This is a list of 14 stocks he likes right now, not because they are high dividend stock, not only because they're high dividend stocks, but because these are companies that are actively increasing their dividends. So just because a company offers like a, say, 3.5% dividend, okay, great. You get 3.5% return for owning the share. But dividends, when a company's raising their dividends, it's a sign that they feel good about their business, their cash flow is growing.
It's true.
Typically, companies don't raise their dividend if they're like really struggling, right? They're going to take that extra cash and put it back into the areas that they're struggling and need to fix problems. So these are companies that are raising their dividends. Let me read what he had to say. Dividend growth exhibits a lagged relationship with earnings growth, realized EPS growth of 47% and just 4% DPS growth in 2021.
What is DPS growth?
I have no clue.
Dividend per share?
Probably.
Yeah.
Sounds good. Sounds right to me. Coupled with
dividend per share.
Basically saying this is like a good indicator that you can expect good return. Not only good return on the stock, but then you're also getting the stock back. You're getting the return from the dividend as well. Someone's asking what's a dividend, and I only know buybacks.
Same thing, man.
Yeah.
Andy, come on. It's the same concept, okay? They're not the same in practice, but they're basically the same in reality.
Basically, instead of the company buying...
It's returning money to shareholders. It's the same fundamental thing.
Right. So a buyback, the company will go buy shares that then brings down the supply of shares out there, which raises the price. So they'll go out and buy their own share. Apple just announced they're doing a big buyback, but they also announced a dividend increase. Dividend just is a company promising, we'll pay you this yield per share that you own. So if a company's a 2.5% dividend yield, then for every share you own, you get 2.5% back on that share at like each quarter, like a quarterly dividend.
In straight cat. Well, no, it doesn't. It could be monthly. It can be monthly.
It can be monthly.
It could be annual.
Andy's saying just give me buybacks instead of dividends. Either way.
Do you take it? Do you reinvest your divvies or do you cash?
Yeah.
Do you cash out?
I reinvest.
I always reinvest.
You
always reinvest.
That's how you get
the real compounding.
Compounding return is by
and also you don't
dividend.
pay. You don't get to
So
pay taxes.
right. If this same concept, right? We're looking at companies that are increasing their dividends or increasing their buybacks.
Yeah.
Same thing, right? Just companies that are increasing the money they have on their balance sheet, have money to spend. They're trying to return value to shareholders. So NRG Energy, number 14. This is what I'm not familiar with. It's a utilities play. 3.8% is the estimated dividend yield this year, 2023, 4%. So this is a company expected to raise its dividend. Energy play, you can see from the chart here, it's down around, I don't know, $36. High of the, looks like we were at highs above 45 earlier in the year. So NRG, not very familiar with it.
Just an energy. I don't. To me, all oil plays are the same.
Well, I don't know if this is an oil play because it says it's a utility. It's not an energy.
Oh, I'm sorry.
play.
I'm sorry. You're right. I apologize. Yep.
Invesco. Everyone knows Invesco. They run QQQ.
It's IVZ, right?
IVZ. Yep.
All
right. Ticker IVZ. 3.8% expected yield this year. 4.1 next year. So Invesco is looking to return some value to shareholders. I don't know how much money Invesco is going to make if the Qs keep dropping the way they have been, although doing well today. T. Rowe Price, another group in the financials.
Dude, they love these like lower, not as sexy financial names.
Like not the Goldman. Well, this is coming from a guy from Goldman Sachs, so
all right.
Maybe he doesn't want to say Goldman. Best Buy, interesting. 3.8% dividend yield. That's not too shabby. Expected to raise to 4.3%. I mean, Best Buy, the stock chart speaks for itself, but if you're long, consumer spending, you're long technology, Best Buy could be a play with that dividend yield. Spencer, Whirlpool. We've been talking about this one.
Hey, how is Whirlpool doing? Let me pull up their chart right now. I tend to lose sight of stocks after.
I'm going to skip ahead here to the top 5.
Wait, I want to look at this Whirlpool chart 1 second now.
Yeah, no,
because
take the screen back.
Because that earnings report. Oh yeah, it like gave it all back that day, but now it's come back. Wow, look at this Whirlpool. It's back to almost the high of that post earnings day. It had that huge gap up, gave almost all of it back. It didn't quite fill the gap, but it almost actually kind of did fill the gap, almost. Yeah, and now it's back up there. Wow, what a strong stock. That earnings report wasn't even that good, right? I'm trying to remember. It was a few weeks ago now. Wow, what a turn there. Okay, what else was on the list? Sorry.
So I'm just skipping ahead to the top 5. This is on Business Insider or Markets Insider if you want to go ahead and try to find the list yourself. But top 5, Verizon Communication, 5.3% expected yield this year, 5.4. So barely a raise in dividend there, but I think Verizon is just seen as kind of a safer stock, and they offer a dividend. So there we go. Pioneer Natural Resources. Here's a true energy play. 6.5, which this is interesting to me, Spencer. It's 6.5 this year, 5.6 next year. So this one's actually decreasing their dividend. I don't even know what's on this list. Not interested. Simon Property Group, a real estate play. 117 a share. This thing was 170 a few months ago. 5.9% this year, 6.9. Nice. Next year, that's pretty, 7% isn't bad for a dividend yield
pretty good
on a real estate play. Devon Energy, DVN. This has been one of the kind of dolls of the stock market this year. Energy has been by far the best performing sector since 2022 hit. But Devon's a nice play.
All right.
Or it's been doing really well. I don't know if it's a nice play now. Doing really well.
That's also true, Sandvik. Thank you.
Lumen Technologies, ticker LUMN. Dividend yield 9.5%. Lumen, $10 stock. So if you want a cheaper stock to get you exposure to some dividend plays, Lumen could be your best option. Yeah, Sandvig, good point. The yield, if the price goes up, so it's like a predetermined.
The yield will go. That's why you can also just look at what the dividend is and just,
right. It's like 50 cents a share. So right now that's 10%, but if the stock goes up to whatever, then it'll become 5%. But it's still the same dividend. It's predetermined, right? All right, that was something I just want to discuss because I know we've had more and more people talking about how they can invest in dividend stocks.
Yep.
Reed saying just got to double check if SPG can cover its dividend. Guessing they probably have a really high, tight payout ratio. Mall REITs going through a decade of long secular.
Yeah, I don't know if I'd be buying Simon Property Group or any.
Is that what they do, Mall?
That's Simon. Yeah.
Simon Property Group.
Yeah. I don't know if I'd be buying any more real estate.
I don't know. I will say when I might go to Somerset tonight when I went a couple weeks ago for the first time. Was pretty popping.
Okay. If you say so.
I mean,
I haven't been to a mall.
Just one mall.
I haven't been to a mall since
I'll do.
I was in a mall in November.
I'll do some DD tonight if I end up going.
All right. Way earlier in the show, I saw a few comments in the chat about biotech ETFs. Someone asked me to look at XBI versus IBB. So this is a tool that I use. It's on a website. It's called ETF Database, etfdb.com. ETF database up there. They have this head-to-head comparison tool. You can like stack ETFs against each other. So I brought up the IBB and the XBI, and here's just like the overview. My take is if I had to pick one, I would pick the IBB over the XBI, and here's why. When I buy an ETF, I'm buying it because I want to be diversified. That's the whole point, right? I want to be placing a very broad bet on a secular trend or a specific industry or a specific factor, right? In this case, biotech. I want to place a broad biotech bet. So in looking at the holdings for IBB and XBI, two things jump out, right? Number one, IBB has more than twice as many stocks in its basket as XBI, okay? And the second thing is look at the weightings. Notice how equal XBI is, right? The highest weighting in XBI is 1.25%. That's Iovance. And IBB has stocks that make up 8%, 7%, 6%, 5%, 4%. This is not by accident, right? XBI has an equal weighted strategy, which means that everything in this, all 158 stocks in this ETF are going to be more or less the same weighting, right? Everything is going to be pretty much between here. Let's go to what's the smallest weighting? Oh, there's pretty small weightings in there. But you can see the top weightings are all more or less the same, right? It's 1.25, 1.18, 1.1, 1.07, right? There is nothing that makes up a large piece of this pie. I've seen research and backtests that support the idea that equal weight strategies work. And I'll be honest, I don't really get it. Because what has to happen for you to maintain an equal weight portfolio? Think about it. It means you have to sell your winners. It means if you have a Amgen on the left or Moderna that goes bonkers on you, goes crazy, goes up, whatever, 50%, 100%. If you have an equal weight fund, you need to sell that so it doesn't get big, it doesn't take up a bigger piece of your pie. I would rather be more diversified and let my winners run if I have them. That's what IBB has done. It's let its winners run. Amgen, Gilead, Regeneron, Vertex, Moderna, Biogen, which has been a dog actually. They all make up a large piece of the IBB pie because they've all had huge runs at various points in the last few years. So those are the two reasons why if I had to pick one, I'd pick IBB. It's more diverse, it's got more stocks, and it's liable to let its winners run. And you can actually see this in the performance if you just look and stack up the IBB against the XBI together. I mean, they obviously both suck, right? In the last year, they're both terrible. But look how much the IBB has outperformed the XBI. XBI in the last 52 weeks is down 43%. IBB is down only half that, basically. So if I had to pick one, I'd pick the IBB. It's got a little bit of a better dividend there. I think it might be more expensive. I think it might be a little bit of a higher. Yeah, it's got a little bit of a higher fee. Nothing crazy though. But if I had to pick one, XBI or IBB, I go XBI. I'm sorry, I go IBB because it's more diversified and it's liable to let the winners run. IBB is gonna have to sell, or sorry, XBI is gonna have to sell its winners to maintain its equal weight strategy. All right. It's 1:55, which means we have 5 minutes left until our lives are going to be changed forever. Not really. Our lives aren't going to change at all. They're going to announce a 0.5 point rate hike. Markets will do this and that and that and that and that. And then actually, now that I think about it, Aaron, last time around, didn't we end up right back where we started? We did.
Yeah, I told you.
Okay.
Remember you said you didn't recall?
No,
So
but now I am.
We
No,
popped,
now I
and
am.
then we sold off. Or honestly, it might have been the other way around. We might have sold off and then no, I think we popped and then sold off those gains.
Yeah.
So I mean, I'll tell you what, if we do get a pop and it's substantial, like the Qs are at up 0.2% right now, I might sell my calls if we pop like 1% or something. But I don't know. I mean, I just feel like anytime to me, there's just more alpha in going long here because there's already so much downside. Like we're already down 13% in the last month alone on the Qs. I'd rather try to play for the upside than going down a few more percent. But
do you want to stay live past 2 o'clock, just like 2:01?
Yeah.
Just to see.
Yeah.
All right.
I think it'd be fun.
We'll stay live like 2:01.
I mean, it's only in 5 minutes at this point.
It's true. It's only 5 minutes at this point.
Oh, holy shit! It's my birthday in Asia.
Dude, freaking Siri just talk to me right now.
My frontal. If I was in Asia right now, my frontal lobe would be fully developed.
Wait a minute.
not.
Wait a minute. Are you officially old enough to get car insurance or to rent a car? I mean,
At 25, I believe. Well, no, because I'm 24. But
how old do you got to be to rent a car in this country?
I think 25.
Depends on the car.
Well, I think no. I think you can. I think you can rent a car if you're under 25. You have to pay like a fee,
Yeah, the premium is higher, right? Yeah.
something like that.
Okay, you have to be older than 30 to rent a vintage car. I didn't know that.
I know you have to be 35 to run for president, so I've got 10 more years on that. 10 more years to prep for that.
That's
25. What can someone else find me something I could do at 25 that I couldn't do at 24? I think when do I have to get off my mom's health insurance? 26.
26.
Jeez, that's gonna
yeah.
suck.
Right.
Oh, hell yeah.
You don't have to change your insurance.
So
right
I'll have
away.
till the end of 2023 on my insurance.
If you want that.
That's good.
If you want that.
I don't care. I don't have to pay for it.
Yeah, you don't have to pay for it, so you probably want that. Unless, hey, I don't know.
Unless
what
it's like bad insurance,
Unless
but
it's
I
bad insurance.
don't know.
I don't know either. All right. We're just chilling.
He's
Hey.
popping. Oh, holy shit! This might be my birthday present right here.
Oh, jeez. Really?
Why are we popping before? See, this
Dude,
is
silly.
stressing me
This is
out.
silliness.
This is making me think. All right,
is
we're
silliness.
gonna get the statement in
Dude,
reverse.
it's all gonna come back. Don't act like it's not gonna. If you sell right now, you're probably in a good spot.
Did someone leak? Do we have the same leaker from the Supreme Court leaking the Fed statements?
Oh, too soon. Too soon.
Too soon.
Yeah. Wow. That was a nice little pop there. Let me bring up the chart. Well, let's just watch here. I'm gonna bring up a 1 minute chart of the Qs, and we'll just watch that. That's what we'll do. Because why not? You know what though? Actually, it's 1:59. Shoot. All right. I was gonna play a commercial for FinTwit, but it's too late.
No, do it, and then by the time it's done, we'll get to it.
No, it's too late. It's 1:59.
All right.
All right. Let's make sure I have my Twitter open and my Pro open and everything like that. So we don't even need to read the statement. We just need to watch the market. Here we go. We are seconds away. from
I think my mom might think it's my birthday today.
the half point. That's funny.
Actually, I don't know if she. I don't know.
All right. Incoming. I should probably go to the Federal Reserve website. Ron, can you set up the Fed stream, please? Thank you. It's already set up. You just got to set the video up and all that jazz. How we looking? Oh, look at that move. Look at that. Oh, no. All right. Surprise.
Yeah, I mean, it was always
The Fed raised rates 50 basis points, aka 0.5%. Shocker. Oh man, I'm stunned.
Yeah, I mean,
I'm stunned. Oh.
wait,
Did
what do
not
you have
see
up?
this one
Oh,
coming.
the Qs are up now.
Did not see this one coming.
Oh my God! It doesn't even know what to do. It's like, yeah, we all knew this.
It
was
never knows.
happening.
It never knows what to do.
Craziness.
All right. The Fed is highly attentive to inflation. Yeah. Thanks for
no
that.
Shit.
Oh, runoff. Okay. Balance sheet runoff starts June 1st at $47.5 billion worth of assets a month. Then they're going to increase that to $958 billion per month after 3 months. Oh boy. Okay, so the Qs are ripping here. Let's not everyone blow our load just yet. This is everyone. This is going to be a volatile next few hours. But there we go. His name is Jerome Powell, and he pumps the market. Are you selling? You getting out?
No.
No. What? No?
No.
Dude, man. All right.
Nah, fam.
All right.
We
well,
ride till we die. Here, I'm a rider.
All right. Well, that's a wrap. We have to end our show right now because we gotta. Why?
It's my birthday tomorrow. I gotta hold on to these calls.
Brian,
because,
I don't know, man. Straight up, I don't. Brian asked why we like it. I don't even know. It's all computers, man. Because now we go back
Now
down.
they're saying they don't like it. Look, Q's starting to come down. I don't know. We'll see.
All right, everyone, smash the like button. Come on, let's get some more likes up in here. We had one guest on the show today, and Aaron and I carry the
Tiny
load.
Pie's bearish as hell. Yeah, I mean, I think it's nice some days to have less guests. It gives us more time to just kind of talk about whatever, interact
it's
with the
true.
chat,
All right.
rather than having to sit to.
I'll see you guys on At the Close at 3:30, and I'll be back on this show on Monday. Be nice to Bree tomorrow. Going to send you over live to the roadmap starting right now, assuming they have their redirect set. But, Bree, are we really coming off here? How hard?
Hard.
Really? Oh, yeah. A little bit there.
I should have sold my calls.
I told you. All right, guys, smash the like. We'll be back tomorrow. Well, he'll be back tomorrow. I'll be back on Monday. And
Love you guys.
whew.